Are we live? Coffee ready, says Niran. Well, Navanethan. Let me just see. I'm just going to wait here and see. It says that I've been live for 7 seconds on my screen, but I have no idea how long it's actually been. So if you can see this up here, that'll give you an idea of the latency. 15, 16 seconds, 17 seconds. This might be happening minutes away for you. Hi, Peter. Hello, hello. Good to see you there. So I'm just going to open up the charts here, and as we can see here, hi Peter, how you doing? On my screen, I can see that list, of all the different pairings on TradingView. But on your screen, you can see the chat window. So hopefully that's a bit more enjoyable for folk to get to see their own messages come up on the screen. Who knows if this is working though? Yeah, well, the idea behind today's stream is essentially this. Yesterday's videos covered everything that we needed to talk about for today anyway. And nothing has particularly changed. So I thought, why not just do a live Wednesday stream instead and have everybody get to tune in. Reconnection successful, it says on OBS. Are we on? It's just there's a problem there. It's rubbish. I'm just going to go into the chat thing here. Say hi, trying to get it up and running. Hopefully it starts working again. I don't know, maybe I'll need to disconnect and reconnect or restart the computer or something. Oh, what a disaster. These are always a disaster though, these live streams, aren't they? Def, turn the volume up a bit. It's going now. Brilliant. Okay, volume. How do we do the volume crap? I think that's over here on what you call them? OBS or whatever. I'm not an expert at this stuff. I am an amateur. So that's what's going on here. Do. I don't know how. Let me just see. Can I do it on Windows or what, buddy? I mean, I just don't know what. Microphone. See, microphone. Is that going to be coming up if I search? Microphone setup. Voice speed. No, that's not what I want. Microphone. Get started. No. Right. Volume may remain a bit of an issue here until such times as I figure out exactly how to feckin' do this. Well, if you've got any tips for me, then let me know. Ooh. Error, YouTube is not receiving enough video to maintain smooth streaming. As such, viewers will experience buffering. Okay, that's annoying for people, I'm sure it is. Maybe I'll have to change the settings on this thing. I don't know how to do that, but I could try. Stream settings, put it to low latency, that might help. Okay, now how do I get my microphone louder? Stereo properties. Mic. I can boost it, maybe. Yeah, this might be boosting it. If I chuck it up like 10 decibels, that might be good. Let's see if that's any better. I don't know. Right, it's 10 decibels louder. Hopefully that's okay. Maybe I'll bust it up a wee bit more. Gosh, sorry about this lack of skill that we have on the go here. I'll just stick the charts up behind me again. At least there's something to look at. Oh, I can read it. It's fine, right? Just the volume bit low. That's better. Oh, brilliant. Okay, cool. Okay. Okay, dokie. Right. So, apologies for all of the technical issues that we were having at the start of the stream. I'm Rocky Outcrop. Welcome to the show. And as I'm pretty sure there's only a couple of people here, then they already know who I am. I can skip the introductions. Suffice it to say that I am God's gift to technical analysis. Okay, I don't want, just being modest over here. Okay, thanks so much for joining me. Let's take a look at the charts together, shall we? So in yesterday's video, we were talking about a few things. Oh, by the way, All Systems Go says, Navanethan, that's brilliant. Cheers, by the way, buddy. I'll keep checking over here from time to time at the chat so that if things go all haywire again, then we can sort it out. Yeah, yesterday what we were talking about was a few different things. In fact, well, we've been talking about this trend towards and whether or not we're doing okay. Okay, it says reconnected. It's hard enough doing these episodes without your technology shafting you in the background. Right, yeah. We've been talking about the trend towards the top side and kind of how to keep an eye on it, really, essentially, because we don't trust this friend, right? We know that the trend is your friend, but none of us trust our friends. Oh, look, here we have a message. It's me, and this is logging. There's it you, Rocky. Oh, great, nice one. If that's you, Huia, this is me. I'm here. I hope you can see me. Right, it's buffering on my end too. I'm really sorry about the buffering aspect of things. Look, if it all goes to pot and I need to just make static recorded videos and put them up instead, then that's what I can end up doing. Don't be afraid to let me know if that ends up being the case. Do I have this laid out perfectly? Right, yeah, if look, ultimately, if what you decide is that my internet is just not reliable enough right now, then let me know, I'll ditch it. Okay, cool, nice one, excellent. Right, well, brilliant. Okay, so yeah, what we've been talking about is the trend towards the top side and kind of keeping an eye on it. And one of the easy ways of doing that is with Fibonacci retracement points. And I like to make this sort of analogy when it comes to getting your fingers chopped off. Where I talk about that if you lose one finger, it's okay. As soon as you lose two fingers, then things become a problem. And that's kind of like the 236 Fibonacci retracement point. But of course, you're okay with that still, right? Until such times as you lose, 6 fingers, and you're just down to these, and that's what all you've got left. Then there's a real problem on the go, and you blooming well need to stop losing fingers at that point. And that's why I think about when it comes to the golden pocket. Okay, so where we have, so let's just draw in this Fibonacci here. This is the CME charts. Do we want to be on the CME charts? In fact, maybe what's better to do is to take a chart and ditch everything off of it. What do you think about that idea? I'll just ditch everything off of a chart. I don't want to lose all of this historical stuff. But yeah, shall I just ditch it all? Yeah, let's just ditch it all and start from scratch, right? Let's just chuck it all in the bin. I tend not to do this. Obviously, I'll be missing little things, like if we see the prices going back to any of these levels in the future, I'll be thinking, oh, I would have liked to have had that chat from this episode 6 months ago or whatever. Who cares? It's gone. Okay, so we have a clean chart here, and I've been talking about then the 236 and the relationship with the Bollinger Bands, for instance, as the recent sort of chat. Let me go up to the 24-hour time frame and zoom on in a wee bit. With Bitcoin. You know what? I kind of hate, to be honest with you, I hate the look of the Bollinger Bands on my screen. It's one of the reasons why I don't use them very much. So, yeah, let me know in the chat what you think of having the Bollinger Bands on your screen. It's obviously very distracting, but what I can do is hide them for now and just leave these moving averages on here. So let's talk about trend here, shall we? At the start, let's talk about trend, and let's put on the 200 and the 50 simple. Let me just check those numbers are right. Great. Okay, so we've got the 50 and the 200, and I'll just go back and take off all of the other ones here. So this is our trend sort of basics. Okay, let's just start off with the basics. Ahoy there, says Monkey Magic. Ahoy there, Monkey Magic. Great to have people here. This is absolutely fantastic. Thanks so much for everybody joining me. Really, I really massively appreciate it. It's always good, so thank you to everybody. Do you want me to be brighter on screen? I have this LED light that I can shine at myself. Look at that. Now I'm a bit brighter. Wonder if that's even better. Might be worse. Now maybe I'm ghostly. Ooh. Yeah. Checks in the mail. Oh, great. Right. Anyway, yeah. So we had a golden cross back over here on May the 20th, and everything's looked fairly rosy since. The only things that I would really say about this from a very broad perspective is that we haven't tested the 200 simple since crossing over here with this golden cross. Okay, that's just basically the first takeaway. So maybe we should form a set of notes as well. How about that? As you can tell, I didn't really have a plan for this live episode, so I mostly just want to chat with you guys, to be honest with you, and hang out really for a wee while. But let's just make some notes for a while. So there is a golden cross. There has been a golden cross. That can be our first point. But we can also then add to that point and say tested the 50 multiple times, not tested 200. Okay, and then we can back test that, right? How about that? How about we just sort of back test this concept that I've put on here? Because far be it from me to say that something is, definitely the case and then not go back and check it out. So in the past, when we've had crosses with like golden crosses, did we get retests? Well, we did here, and ultimately, of course, then that broke down the way. Over here and the rise up towards the highs in July 2019, we didn't actually get a retest along the way of the 200 simple, so that's quite obvious. But what we did have was a test of it right, here, which then led to the crossing over. But we had a big, drop off in the price. So what did we see in terms of? We tested the 50, and then we had to drop a subsequent 20% just to test the 200. Then we came back up above it again thereafter. Let's see then, looking back. So we have a couple of ideas. First off, you'd have to test the 50. Let's go back a bit. I mean, I know as well, by the way, if you all feel like this is, if you all think this is far too basic, which it is, let's be honest, then I could skip past this and do some other stuff, but it's just chit chat, isn't it? Somebody says in the chat, honestly, I don't think low volume would be an issue because we all know when whales come in, they come in really big, be it up or down. Nice, good point, by the way. I think Navanethan was talking about the volume of my microphone, but that's actually something. That's actually an interesting point. I quite like the way that worked out there. That's great. See, this is the benefit of live chat, right? This is the benefit of it. What about this run up that we had in 2017? Did we test the 200 simple along the way before coming back down the way? No, we didn't. And in fact, when we did come down, we had a big drop off in terms of price action from testing the 50 down to the 200. That was another 50% of the price knocked off there. And we could clearly see at this point when we did test it that we actually got a trend reversal in the last sort of bull run, or well, the 2017 bull run. Let's call this the 2019 bull run. And then when we got across of it, or a test of it and then across, ultimately that led to the end of the trend. So let's just then add to our notes and say that a test of the 200 simple could very well be the reversal of the trend at that point. So we're happy to have not seen it tested. Okay, so we're happy to not test 200 as it looks like it could signal BTC reverse trend reversal. Okay, so we've got some, so we're getting somewhere here at some point, right? We're getting somewhere here. Doing okay, I think. Okay, again, like I say, no real plan when it comes to this. If anybody wants to suggest a plan or anything to look at in the chat, feel free to go ahead and I'll just jump over to it. But let's just see how this thing evolves. So we've kind of covered off these two parts of things. We're in a golden cross. We have tested the 50 multiple times. When we tested the 50, we never went on past the 50 to test the 200. And if we were to do one, I'd be quite worried about the health of the trend. As we can see as well, we're miles away from either of them. Let's just have another sort of look then and say, how far have we ever managed to get away from the 50 simple moving average before coming back for a retest in any of those three periods? I suppose if we want to look at this little section here with regards to the 50 simple. Well, let's look at the trend that we've been in actually for the last since March and discuss it from that point of view. We tested it here once we'd moved however far above, and if we take a little measuring stick now, by the way, you might not see this, my chart is on, look, all this old stuff from my streaming thing. You can see just down there, just down here now that I've moved myself out of the way, that I'm on linear. Just want everybody to see that before I start using measuring sticks, because obviously if I was on log, the measuring stick would be relative to the scaling on the left, and it would change things. So we're this far away from the 50 simple right now, and you can see, well, we've never really been that far throughout this last 6 months. In the past, we did come up here and we were that far away from it, and then we tested it again in July. So there's that type of an idea. What about over here on the 2017 bull run, which is of course what everybody wants to make comparisons to. How far away did we ever get away from the 50 simple before coming back and testing it? Well, we were always testing it before this far away. Then we got it here, and wadoosh, way up towards the top side. And I think that that kind of sums up where we are in a sense right now, you know, because we're looking at this and saying this is a we've had a, you know, a very good run towards the top side. Could we continue? And the questions that people have in their mind right now are, could we be going up towards 16,500? Could we going up to 20,000, putting in all-time highs and stuff like that? So, for instance, you know, we're miles away from this at the minute. The last time that happened, that ran up towards the last time it happened, we dropped down towards the 50. The time before that, we went up on a sort of hugely parabolic run towards the top side. So we're in the same position right now in terms of where we've been in the past with here and over here, and we're looking at whether or not we get a pullback. So at the minute, am I happy to see a pullback, given that we've come so far away from the 50? So if we did come back and test this and then not continue to see higher highs thereafter, we could then expect to see coming down and retesting the 200. Okay, that's a little bit more complex. Let's break that down a little bit. Here you can see we moved so far away from it, we came back down, we retested it, we ultimately didn't put in any higher highs, came back down and retested the 200 thereafter. Up here we came away from it, moved back down, retested the 50, came up, didn't put in higher highs, and then came down and tested the 200 simple right now. So I think we can enhance the sophistication of what we're saying about this right here by saying that should we see a test of the 50 simple, I then want to see a higher high thereafter, or else I feel like we're going down to the 200 simple. Okay, how about that? I think that's fair. Let's back test this in the trend that we've been in so far. So we came up here, we came down, we tested the 50 simple, we went along, we didn't test the 200 yet, then we put in a higher high, came down, tested the 50 simple, went past it, put in a higher high. I think that's fair to say. So we can add that to the list, okay? So we're happy to retest 50 so long as we see a higher high. Now, if we see a lower high following a test of the 50, it is statistically more likely to at least test the 200. You know, right? Okay, cool. So I think that we've increased this up a little bit in terms of sophistication. That's quite cool. So what we've got in the chat at the minute, just keep checking in. I have a sell order in for 13k BTC there, says Susan. Oh, by the way, hi Susan. Sunny Boy says, guys, when's BTC going to correct? Anyone have any clue? Well, kind of, by the way, Sunny, that's kind of what we're talking about at the minute, right? We're talking about this strength of trend towards the top side, and if we see certain movements, you know, what could we see thereafter? And of course, we're going to just layer. What happened here, by the way, if you didn't tune in from the start, is I cleared away the charts and put on just these two moving averages, and that's it. We'll layer upon layer upon layer the sophistication with this as we go through it. Okay, so we'll hopefully try and assess some of those answers in a wee bit. Hiya, I'm Tatas, tea time, I'm drinking coffee, slancha, by the way, Cage Mail to the stream, my friend, there's a little bit of Gaelic for you. What's the price level of the 200 SMA, says Peter? Well, currently the 200 SMA is sat in here at 10,664. Given that that's a good question, let's just put then a couple of we'll use a different text box for this one so that we can have sort of qualitative information in this one, in this text box, and we'll do sort of quantitative information in this one so that we can sort of refer back to it without having to think about things too much. Okay, so we'll have these two numbers. First off, we've got, let's call it 10,600, right? Obviously, this will be moving towards the top side as days go by, and it's ever so slightly above 10,600 at the minute. let's call it 10,650, right? Just so that we have a number to be able to put on here, which lasts for anybody who tunes in to see this live stream, tomorrow, watch it retrospectively, sort of thing. The 50's in there at 12,350, let's call it. So let's just call that 12,350, right? So there's two numbers for us that we can be aware of as we, layer upon layer certain things. Now, what we're kind of looking for at this point, when we're looking at the quantitative, if you like, the hard number information, is we'll be looking for confluence, okay? We'll be looking for confluence at at different price numbers to build up the picture about the significance of those prices at those levels, okay? That's what we're going to kind of do here in today's show. That's what it turns out we're going to do in today's show. This is, like I say, completely live, no plan in advance, so it turns out that this is what the episode is evolving into. I hope that it's good crack. Right. Yeah. Oh, by the way, another piece of quantitative information. The yearly support range is 11,750 to 11,850. If a retrace happens, then I would expect that level to hold. Okay, so I'm not going to go in and verify what you're saying right now, Peter. We'll do this community style, right? We'll operate on a basis of trust. Of course, if what we find doing what we do overlaps with what you just said, then there's confluence there. But we'll put in another text box here with and this can be numbers from the chat. Okay, cool, right? So if you want to provide what you're looking at in terms of where you're finding potential support and resistance to add to this picture here that we're developing together now, evolved again, then feel free to do so. So we have one from Peter, and he says, Peter's basically saying yearly support zone, we'll call it, is 11,750 to 11,850, right? So we can put that in there. So if there's any more chat from the box, you want to stick your own one in there, feel free to do so. Tradespot, Umpatas, Sunny Boy, anybody, that's cool. You're welcome to sort of chuck in what you're looking at right now. Of course, we're in the broad perspective. I've got the 24-hour chart up behind me. This is because I'm looking at the 200 simple and the 50 simple for crosses. I appreciate that that's quite, I appreciate that the candles are not very clear to see, but we're looking at the broad perspective here. So if you want to add any numbers to that, go ahead and do something. Tradespotting seems to concur with Peter at the minute, saying, I like your thinking, Peter. Of course, we could wick down quite a bit before stabilizing there. Good point. Of course, as we know that we could very much, when we do come into to sort of come around certain levels, we obviously have there's obviously fluctuations. That's one of the reasons why I wrote this in as a zone as well, as opposed to sort of a strict and fast line. Okay, so the point phi of the macro, the point V being the Roman numeral for 5, is that a coincidence that I said point V instead of point 5 there? Sometimes I wonder about my own brain. It's the 0.5 of the macro view, 11,750. Right, perfect, great, nice one, man. Are we talking all-time highs to lows here? Look, we're getting ahead of ourselves because we will be doing Fibonacci stuff too. So this will come across. Spoiler alert. We'll come across this information soon enough, right? Right. So next, then we've kind of done enough. I feel like we've done enough in terms of looking at those two moving averages, certainly on this time frame. So I'm going to just take them off there, and then we're going to look at something else. I could use these numbers that we have here, which are the atomic nuclear numbers. I'm liking using these on a smaller term time frame just to kind of get a handle on the scalping positions, etc. What I'm going to do here, though, since we're kind of starting off from the broader point of view, by the way, just to reiterate, if you've just tuned in, yesterday's episode has all the details that you need to know about it, and extreme details about where we are right now with the price action. So this is a live experience for all of us to do together as a community. Yesterday's episode, nothing has particularly changed since yesterday, okay? One of the things, if there is anything that's changed, is that we've come back down, retested the 236, come back up and then established that again as support. Now, I'm not going to prescribe to you a methodology or a philosophy on retests of support versus whether or not testing support again and again makes it weaker or stronger. I'm going to leave that up to you to decide. I'm just going to say that that's what's happened yesterday, and that's not a significant change, okay? Either way, whether you think it's stronger or weaker, we're still looking at the same picture until such times as things change. Now, what you see is I put on EMA2. That lines up with, that's the number 21. Let's take a look at how we're doing on the daily time frame with regards to the 21 EMA. And at this point, I'll be able to sort of start to flow between different time frames as well, because it's interesting to look at the 21 EMA on the weekly time frame and stuff like that as well. Now, when it comes to 21, by the way, as a number, I use 21. I like 21 because it's more of a Fibonacci number. I don't care about it, you know. Really, if you're looking at this thing, then and you're Peter Brandt, and people like Peter Brandt, so I often refer to him on the channel, mostly because, you know, market orientated. I know people like him. He uses 18. Okay, so you can use whatever number you want. I'm going to use 21. If you want to have an explanation as well, by the way, about, and I'm sorry about the digressions as I go off on tangents here, but if you want to have an explanation about, you know, the about why people use specific numbers when it comes to doing their to their particular indicator or whatever they're looking at, the best answer that I've discovered in any of the research that I've done over the years came from J. Wells Wilder Jr., where he just straight up tells you that really what you do is you look at a bunch of different numbers, you kind of get to the point where you're saying, like, there's you know, this number might be better here, this number might be better there, but so long as it's within a few of the, you know, 1 or 2 or 3 or 4, we're okay. But then past that point, the reliability then has a steep drop off. So what I would say about, you know, just if you like looking at the 21 EMA on the daily, you could go down to the 18 and you'll get, you know, more rapid changes with regards to the price, or you could go up to the 23 and get slightly more, you know, softer, more smoother average, less false signals, if you like, and really I use 21, okay? But if you were to go to 27, you'd be talking about something different. If you go all the way down to 14, you're talking about something different. So, okay, that's how that goes. Now, the answer isn't because they've done extreme research and found that in 99.9% of cases, it turns out that this number is the best number to use. No, that's not the case, and that applies to every single indicator as well. Moving averages, oscillators, whatever it happens to be, Bollinger Bands, whatever. It's not the case that they've done this research and found it's the best one. No, they've done research and found that within a tolerance, a few points up and below, that it tends to be a better signal, but really it's up to you if you want to change it. Okay, so there we go. Hope that gives you a little bit more freedom to operate in the markets. Let's establish, therefore, right now where we are with regards to the 21 EMA. And I'm going to stick this information into the quantitative box here. The 21 EMA comes in currently at 14,176. I'm going to call that 14,200. I hope you don't mind. I think that that's fair enough whenever we're, you know, just kind of, I mean, if it turns out that 14,175 has confluence to something later on, we can kind of go back and revisit this. I'm just looking for round numbers at the minute because I don't want to make anything too, you know, specific. So that's where we are right now in terms of the daily. That's quite a ways away from where we are right now. We can see that we do frequently retest the 21, and we have actually been testing that along the way throughout this entire trend here. And of course, you know, people who are familiar with looking at the 21 EMA or any smaller numbered EMA will see how it's, you know, be familiar with looking at how it hugs to the price and where the price action is in relation to that and what matters about it and everything else. So we know this. So let's go through the basics again in terms of the not the basics, I suppose, but let's just go through the information with regards to the 21 EMA from a qualitative point of view. 21 EMA is the price is above the EMA. Okay, that's the first point. Second point we can have is that is very what's the word for steep towards the top side? Well, yeah, sloping up towards the top. It's going at like a 45-degree angle towards the top side. That's what we'll call it. 45 degrees upward slope. Okay, pretty good. Pretty good. How about we go back and backtest this idea of slope now, because slope is very important when it comes to EMAs, and people tend to kind of look more about where the price is in relation to the EMA and don't then, invest any more effort into discovering, to looking at the sort of the nuances of the EMA itself. What is the slope like on this one here, and what's it been like in the past? Well, at times it's gone up less. Let's in fact do this in this way. And since we're here to do this together, I hope everybody can can enjoy this. I've got the magnet on. Can enjoy this sort of community approach, because, like I say, yesterday's video has all the details. Today we're just exploring things together. What if I just take this line here and say that's a rough guideline on where the 21 EMA is and how it's been performing. This here then therefore is an analog of the slope that we've had up, the moving. This here is an analog of the current price with regards to its average over the last 3 weeks and 21 days. So we can see how have we performed in the last 3 weeks compared to at any points in the past with regards to the moving averages. Okay, so we're much steeper than we were there, or much steeper than we were there. So we're steeper than we have been at any point throughout this most recent this run. Okay, so let's go back and try and find a time when we were steeper than this. We weren't as steep back here in the run up in February. And let's be clear as well, by the way, that that if you were to see something, let's be clear about this, right? It would be nigh on impossible to see it going at straight up 90 degrees, right? It is impossible to see it sloping back the way that, while you're in an uptrend. However, while you're in a downtrend, you can quite clearly see that that's your distinction there. So if we're looking at slope, then if you're looking at movements within this range, you're talking about extreme highs. If you're talking about it going sideways, then obviously the price action's been flat for quite a while. And then as soon as you go down past this chunk here, then that's the equivalent of going that way. So we're talking about a 45-degree range in terms of slope when it comes to the EMAs. And anything then that is, of course, going up towards as close to, what do you want to call this point? 0? As close to 0 as that is obviously untenable for any duration of time, and anything close to this in terms of movements beyond it make it so that the upward trend is essentially untenable at that point as well. So this is the range. So ideal points really would be like a 45-degree slope. This isn't 45 degrees. That's actually what we're going to call it, because, and where's my measurement? Where's my stick gone? This here's like, if that's 45 degrees there, this here is more like a 20-degree slope towards the top side. Let me just change this, because I really did want to make the point that it's really, steep. That's what I wanted to make the point about here. This is obviously basics again. Hi Harsh, by the way, I hope you get your OKX problems sorted out. Thanks for joining us on the stream. I'm going to come back over to here and check out what we were saying in the chat in just 2 seconds, by the way. So if you've got anything else you want to say in there and have me read it at the time, then you can go ahead and do that. As soon as I finish kind of making the comparison here with this EMA slope, I'll come back to you. So we're agreed, right? I'm sure we are that is pretty much an analog of what we've got right now in terms of the last 3 weeks of price action is summed up with this bar here that I'm using, and it's been higher than it has at any given time. And since well, this is comparable. This is comparable over here on the run up in July 2019. However, how do we compare with regards to the slope on the way up during 2017? Because people will be more interested in this, let's face it. Well, we'll do the full 2019 thing first. Like, look at this in comparison. Much keener. The slope is much keener. There were a few times when it came like this, but not for then a few week period, just for a handful of days, as we had big movements up, and then it came, and then the slope turned off again. So if the slope goes down the way, what we can say is that there's been a retrace. So if the degrees, if the degree of angle of EMA slope decreases, goes steeper, closer to 0, parabolic. Okay, so you understand what I'm talking about. Then what we've had is what we have seen is continuation beyond the average price. If it increases, i.e. goes towards 45, flattens, etc., then we must have seen a subsequent pullback to have got to that, for that to have happened. Okay, so in terms of what we're talking about here, so as we can see here, it follows it for a while, then it goes away and curves away from it, which means that we've had pullbacks in the price, so that some days have happened where their prices have been lower than their previous days, i.e. that's moved down the way. So now we know exactly what we're looking at. This is steeper significantly than any of the pullbacks against the downward trend in 2018, and then let's go on in here and zoom on in and take a look at it versus the run up that we had in 2017 area. Okay, so miles and miles and miles away from it, nothing comparable at any time, nothing comparable at any time, nothing comparable at any time. Here was a couple of days it was comparable, pulled back down the way. As you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 2 weeks later it pulled down, whereas we've had this for what? How long is my measuring stick that I've got here? How long is a measuring stick in terms of days? I'm looking at 26 days. So this is the guts of a month. This is 2 weeks later we saw a pullback, so we've been at it for longer. Let's then pull this up the way. By the way, I think this goes towards the sort of the histrionics of what we've been looking at. This is when we look back in 6 months' time about how the prices have been going. This will be how we remember it, whether or not we're consciously, like, well, we actually are doing this proactively, consciously, far ahead of time. But in 6 months' time, when we look back at it, this will be one of the sort of the dynamics that you'll be able to think about, like how long did we go before we had experienced a big pullback, etc. And that kind of lends itself towards Umpatas's question. I love your username, by the way. Here we saw something comparable here, you know. We did have slight sort of sideways action, enough of it in order to get us to have this sort of belly on the moving average, and then afterwards it went sheer parabolic up the way. So I think then what we can say then in comparison to the most recent prices, that is that if anything if we see another move up the way, that it's time to really accept the fact that we're moving parabolically. And at that point, it's anyone's guess as to when we get a pullback. But I think that when we can see the comparisons between this and how there were times when it was like this, but then it pulled back, that at this stage, we could say this is as steep as we can see it going, unless we want to have a parabolic run towards the top side. So let's just put that into the context of the prices. What we've seen here is that unless we see a pullback happen in here, which would be fine and natural and all the rest of it and just part of the organic movement towards the top side, we're talking about genetically modified price action from this point onwards. If we see this moving up at all, like this, then what you're going to have to see here in terms of price action is parabolic moves towards the top side again, right? And then at that point, it becomes people's guesses as to where we could be going. Could be looking up. Then we'll I suppose we can have upside targets at some point during this video as well. So that's that point made. I don't know if it was of any use to people. I think it was. It provides a bit of context. What we're looking at here is either we do see a pullback very, very soon, or the only time that we've had price action which is extended as long as this before in the past ever has then subsequently led on to a parabolic run towards the top side thereafter. Okay, back in the day, let's just remember as well, context matters. What we had here was the presidential election happened in this year earlier on at the start of the year. In here, where is it? Take out the drawing thing. Go into 2016, 2017, where's 2017? 2017, January. Trump became president, right? The focus was entirely on the economy, and what we saw then in this period of time was all-time highs in the Dow Jones, the S&P, all that sort of stuff. Record low unemployment rates in America. A huge appetite for risk in terms of trading, right? A huge appetite for risk came in here with the Trump presidency in about that time. What we're seeing now as well in terms of the sort of the cycle of things is that we have a slightly different story. So what we would have would be, if we were to do this right now, just from a geopolitical point of view, if we were to do the same sort of thing right now, what you've got here is, in terms of the story running up to it, so you've got the starting point here, then you'd have in about here, Biden becomes president. In this period here, you've got almost no appetite for additional risk. It's all just speculative. It's not value based. Okay, like I was talking about this with TradeSpot earlier on. It's not value based. It's it's not based on your sort of the dividend that you're going to get or the long-term investment. It's purely speculative, and characterization. You could characterize what we've had right now by clearly saying that it's a bubble, right? That we're right in the middle of a bubble in terms of the normal markets. We know that productivity is low, that we know, and everything else. So we know the real reasons behind it. Under a traditional bubble, what you're looking at is speculation having driven the prices way beyond the underlying value of the asset that people are investing in the first place under normal conditions, where productivity has been at an average or a reasonable level for a certain amount of time. What we're seeing here is that we've gone way beyond that during a period of speculation, which has been funded by the Fed boosting it up. Another way of characterizing this section here is that we've seen this rise up in the prices as well, if you're looking at it from a geopolitical point of view. Or not even a geopolitical point of view, just an American economy point of view. What we've seen here is the Fed has supported this move in terms of towards the top side, not directly in Bitcoin, but in terms of other stocks, tech primarily. What we've seen is that at the end of Donald Trump's presidency, as he's been looking towards an election coming up and needing for people to remember this, they needed to remember this: the 2017 all-time highs in stock market, record low unemployment. That was his basis for his entire election campaign back then. And then obviously, this is what's needed to happen for him to even have a chance in the current election. Because if this was going down the way completely across all the markets, he would have lost it 6 months ago, and that would have been decided already, a fait accompli. Okay, so this is two extremely different situations where both of them are characterized by bubbles. One of them moving away from a stabilized price over a long period of time. Another one that's just moving away from an inflated price, purely based on speculation, as in people trying to capitalize in terms of trading, right? So that's the geopolitical thing for that. Do I want to write a note about this? Yeah, I do. I want to write qualitative. In the qualitative box, I'm going to say global, or I'll call it fundamentals. As much as I want to talk about fundamentals, right? This is as far as I'm going to go with fundamentals. We are in a bubble. Massively different political situation. Prices of stocks way above earnings. That's the situation that we're in right now. Okay. Okay. Record. Let's just add a couple other things in here. Record low. Record high. Sorry. Unemployment. In all developed nations. Final point, best thing for future hope is vaccine currently. That's the current, has that got 2 C's in vaccine? That's the current hope that we're in right now, and that's going to change now. Again, credit to TradeSpot for having given me this in terms of fundamentals, this chat recently. That's going to change some things. The vaccine coming in moves us from the potential for us to go back into a world where the cafe down the street makes money. In fact, there's a restaurant here just about 100 meters down the road that has got closed doors at the front of it and a big notice up saying open letter to Nicola Sturgeon, who's the leader of the Scottish Parliament here. Scotland is ruled by a woman, by the way. We're very forward thinking. And it's the Royal Mile, so Nicola Sturgeon has a pretty good chance of seeing that. The Parliament for Scotland is half a mile down the road here. It's less than half a mile down the road, and every single, it's very likely that they'll see this open letter anyway. And it's talking about how they've had to close their business, etc. They're completely fucked. Excuse my language. And that's the situation that we're in right now. It's very, very different to 2017. Very different, hugely different, fundamentally, if you will, different. And so yeah. Anyway, if things can go back to normal, it means businesses like that can start to make money again. So the likes of Bed Bath & Beyond will make more money post-pandemic than it's making right now. If you're in America, for instance, and you just want to shop, Target, for instance, make more money. TJ Maxx is going to make more money next year than it's making this year if there's a vaccine around. Which means if you're investing in something and you've invested in Facebook, Apple, Amazon, Netflix, Disney, because it's a pandemic and you think people are going to just be taking these media consumption digital world products and relying on them to get through the time, and you invest in that, and then speculation and the Fed propping up the Nasdaq and tech-based sectors leads to a rise in prices, and then the complete fundamental basis of the economy in terms of where will money be made in the next 6 months takes a radical shift away from things like that. And for instance, a cinema suddenly starts making money again, whereas for the last 6 months cinemas have lost money, hemorrhaging money all around the world. Then suddenly the money shifts where it's invested in dramatically, and that could have a huge impact on certain products which have got more risk associated with them. And let's face it, this is a risk-on product that we're dealing with now, and it's largely associated with tech and speculation. So that's where we find ourselves. Right, okay, cool, nice one. By the way, the price is currently 15,645. We've risen towards the top side again a little bit. We'll check in with the small term timeframes in a second. I've covered off everything I wanted to talk about in terms of the moving averages there with regards to the 21 EMA and the slope of it, because I want to talk about slope today more than anything. And I've also had a wee chat about fundamentals. Let's check in with the chat because there's a couple of things that I missed. So yeah, by the way, you can right click settings on a trend line. It gives option to show the angle under style. Oh, does it? I didn't know that. I've deleted it now though, haven't I? I've deleted it. Let me just go back the way to get that back up on screen. Oh, I can't go back. I don't want to delete my writing. Screw it. Make a new one and see what angle it was, just out of interest. Style, show angle. Yes, I've seen this before. I've never actually used it. 65 degrees. We're calling that 65 degrees. Let me just make a quick. So that's 90 there. So yeah, so closer to 90. Okay, sorry, I got my maths wrong. Look, I didn't become a trader because I liked maths. Anybody who says that liking maths lends to suddenly becoming a good trader doesn't understand autism. Okay, so cool. Zonar, thanks for joining me, by the way. Good to see it. You can add a parabolic curve line from July till today. Many touches. It's beautiful. Okay, from July to today. Okay, well, yeah. I mean, you can see because that's really essentially going to run along the same way. When you say from July, that means because you get to incorporate these touches here, and that's what you say when you say many touches, and then up the way. And of course, we're here. But at what point? The benefit of a parabolic curve line is that when you say that when we break a parabolic curve, when things move parabolic, right? Simple rule for you, right? Simple rule about parabolic moves. Okay, handy rule to have, just so you know. Break, and I'm writing this all in capitals because this is a handy rule, easy to know. Break the parabolic trend line 80% down move incoming. Okay, just a simple thing. So I'd rather not. I'm not actually going to put a parabolic line on here. I'm actually avoiding looking at that. Now, if you want to insist in the chat that I do it, then I could, right? I could. But if we don't want to see that happen, and when you've got the 21 moving in a parabolic format where it would line up with your parabolic curve, right? Then that's the concept that I was explaining before. It's just another analog of the same thing. You'll always find this in trading. It's just an exact analog of the same thing, except at that point what you're saying is that if we break past the 21 EMA, we could really shit our pants right down to the ground. That would be awful. And I don't want to talk about that in today's episode, okay? I didn't want to talk about that in today's episode. If anybody's interested, 80% move down. So let's just imagine this, because this is what this would be looking like at that point there. Then a movement past this zone. If we said that this was your movement down the way, and you looked at an 80% move towards a downside, then your price target is going to be, give me 80%, $4,000. So if you want to think about it from the inverse point of view, how high could we go in terms of that? Then it's just a repeat of this. As you can see, this is the what I'm talking about in terms of movements towards the downside. 85% move down in prices after we broke the parabolic thing. The 21 EMA lining up with that. You don't want to see that happening. Okay, in terms of well, I do. I'll be honest. I do, because I'm a trader. A lot of people in this community would love to see that sort of thing happen, because blood would be everywhere. It would just be all-round decapitation happening. It would be terrible. It would be. Here's me about to make a really distasteful joke, so I'll not. Sorry, had to censor myself there. It would be terrible, right? But I would love it. I would love that. I would love that a lot. Right. Anyway, distracted myself there because I talked about a terrible joke that I just thought I shouldn't say it. So anyway, right, cool. The Wicks back in 2017 were insane. So they were. Yeah, 30% is just fine. Exactly, Peter. This is kind of what we're talking about here. It's the dichotomy, right? You've got the bula YouTube land sort of Bitcoin's going to revolutionize the world. Let's go parabolic today. Blah 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 mindset out there, and it's a little bit naive, right? And then you've got the other mindset of, I would really like to see, if I want to see Bitcoin increase its price by 100%, I want to see a pullback of 30% soon-ish. At least 10. I'd accept 20 something. Prefer 30, right? Shocking. To get to that 100%, because we can't climb up there vertically, and if we do, then the shock that would have, the reverberations of that in the market could see a pullback. Now, even if we didn't, even if we, as soon as you start extending towards the top side in terms of prices, and you take in little things like fib retracements, and you say, well, let's just do one from here. The more you draw this, up the way, then of course, like the realistic. Look at this is in terms of percentages. Look at how quickly the top line moves. Look at how quickly the top line moves compared to the lower line in any given Fibonacci retracement. So as you can see, the top line is moving away, but look at how the 618 moves up slower. So here the top line's at 9,000 and it puts the 618 at 6,000. Put the top line up to 14,000, it puts the 618 at 7,000. Put the top line up to 20,000 and the 618 still remains below 10 grand. So you're looking at huge decreases in prices. Like, when it first started here at 8 grand down to 5 grand, that's less than 50% move in prices, obviously. 20 grand down to 10 grand, that's a 50% move in prices. But it's shock. Do you see how then parabolic moves without retracements back down the way, in terms of just being able to choose a selected area on the charts early on, are really unhealthy in terms of the reverberations in the market, and that causes so much pain. And of course, in the face of the investor mentality, where people are dollar cost averaging along the way, what people will do is they'll buy it here, they'll buy it here, they'll buy it here, and then all of those positions are out of favor for like 2 years until the prices start to move back up the way again. And that sucks. Who wants that? Do you want that? I don't want that. I don't think anybody wants that. Specifically for anybody. I wouldn't wish it on anybody, but I would trade out of it, and I would I'd love to see it happen, just for the fun of it, because I like trading, and this is an acceptance of the realities that we have on the ground here. Anyway, yeah, cool. Let me see what else was chatting. Yes, that was a great morning chat about how rotation works and the move from growth assets to value assets. That's it. That's Trade Spotting. Who I talked to this morning about this, his real name's Jamie. Yes, that's right. Thanks very much. Yeah, so we spoke about this morning. He's my best friend, by the way. So yeah, we spoke about this morning, and that is True, that's exactly right. That's what we could be looking at. Sounds like Scotland knows how to choose a leader. That's absolutely right. 30% just fine. Cool. I've caught up with the chat. Nice one. Let's then continue on with some more details then. And of course, this has been super broad so far as we put together this story, but we're far above the 21. Let's then zoom on down and take a look at. Well, no. Let's actually look at where the 21 is on the weekly. These note things are going to become a load of hassle for me to deal with them. But the 21 on the weekly is in there 11,750. So let me just check this on here. 21 on the weekly at 11,800. Right. Let's just call it that. I'm not going to verify it even. If anybody wants to verify what I'm saying as I'm looking, that I find myself verifying it. It's 11. It's. Yeah. Okay. I'm a hypocrite. So anyway, that will do there. And yeah, and you can see obviously we're miles away from it. It's the same analysis I did before in terms of how far away we are from this. You can see quite clearly we've only been here in 2 situations in the last 4 or 5 years, right? It's only happened twice in the last 4 or 5 years. Could probably go back further. I could probably say this has only happened twice in the last 6 years if I wanted to. And you're looking at how far away we are from these moving averages without having had any retracement at all. Now, I'm not even talking about necessarily coming back in and retesting this moving average. I'm just simply saying we're so far away without any retracement at all. When was the last time it happened? July, eventually big crash down, and then 2019, and then of course in 2017 when we had the ultimately what led to an 85% decline in the prices, which is kind of speaking to what Zoner was saying earlier on. Cool, so yeah, let's just skip this, actually go down towards the 24-hour time frame again and then stick on the smaller moving averages and make a comparison when it comes to crosses. So what we'll do is we'll take a look at the 21 and the 8. Do you want to look at 8? I want to use 8. A lot of people like to use 9 or 10. This is the same chat I had earlier on about different numbers. The reason I'm using 8 is because of the covalent bonds. So yeah, anyway, put that on, and we have 2 moving averages on the chart now. We've got the 11, or the 8, sorry, and the 21, and obviously you can see that they're positioned towards the top side. Right now, if we look at this and we consider the moving averages divergence convergence idea. Now, this isn't the MACD that I'm talking about here directly. I could put that on the chart if we wanted to talk about it. But let's just talk about the difference between the 2 moving averages right now, just in terms of the difference between them and the spread as well that we have on the go. Before we look at the details anywhere else on this thing, let's just do another quick comparison using another quick measuring stick. Can we say that that's a fair enough approximation of the size between those 2 wicks? I think that's fair enough. Those 2 moving averages. Let's go back in time. This is the manual MACD analog in terms of extensions and overbought, oversold. When were the last times that we were close to this? Well, we were smaller than it there when we got a pullback. We were bigger than it. We were roughly the same. I mean, just take it away. It's roughly the same. It's a little bit bigger. But what we saw is that it got to be in about that stage over here. And then, of course, we came back up and pushed away from it. Now, the trend had obviously turned around even as well at this stage. By that point already, numerous different things telling you that. But this is the showing us that we only saw this happen after huge moves. Looking back the way. Now, how far back are we willing to be bothered doing this analysis? I'm not sure, but we can see that we're bigger than it ever. So there's that. So anyway, I don't want to go on about it for ages. Let me just check in here with this area. Again, pretty much as big as it. At least got a pullback to the 21 or to the 9 there, or the 8 thereafter. Anyway, that's where that is. So I've kind of got a bit tired of writing notes. I don't really want to bother writing that in or explaining that in any more detail. But essentially, cool. We're where we are right now is we've tested the 8-period moving average numerous times throughout this move. In fact, it hugs really, really, really closely to the price action. What with it being just a week and 1 day in terms of its numbers, 8 days. So yeah, we're quite close to it, and we're close to it again. But what we can say is that throughout this period, how many times have we come down and tested it and moved beyond it without coming really close to the 21 then, if you want to talk about it from that point of view. And, well, very, very few. I mean, we came down here quite close to it but didn't touch it, so there's one example of not doing it. Here we did it, here we did it, here we wicked below it, but we didn't open and close below it. The next open was actually above it. Over here we did it, over here we did it, here we did it, here we did it, here we did it, here we did it. So we're talking like 90% of the time that I've seen it so far, we did. Here we closed below it, but opened back up and moved immediately above it again, so there's another little exception for us. But essentially, as you can see here, if we're going to test this, it looks like we're also going to, if we move past it, we're going to test it. So we can say in terms of the daily prices that currently resistance and support is in there at 15,200. It's explained fully with numerous different reasons. I've just come to that same number again, you know, numerous different reasons why that one's important. I'm going to have to stick that one onto the qualitative box here and say then that the 8 EMA on, this was the EMA, on the daily, 15,200. Okay, cool. So we've got this. Now, if we go down below the 15,200 point, it's highly likely, therefore, that we come in and test the 21 on the daily at 14,000. So do I have that 21 EMA, 14,200? Maybe I need to put those two next to each other just so we can see it a bit clearer in terms of the sort of the proposition I was just making there. So if we go below 15,200, most of the time in the past when we've seen this sort of thing happen during an upward trend, when we're looking for a retracement, we know that we go on to touch the 21 most of the time, unless we see it moving back up in the immediate candle following on from that closure below it. Okay, so if we see the prices closing below on a daily basis, which we haven't done in this entire run here for ages, so unless we see them closing below, if we see it closing below 15,200, you can see that 9 out of 10 times the chances are there's $1,000 move to the downside incoming at that point. Cool, technical analysis. This is how we do it. This is how we do it, ladies and gentlemen. Right, so what do we want to do next? Let me just check in with the box. By the way, yes, I use B. It's really hard to read this. I've got it open on another tab. There we go. You didn't see that on live stream, sorry, I just had to sort it out on my computer. Yes, I use 8. Yeah, Peter, you use 8 as well, that's cool, I use 8. Zoner says, ascending triangle, sell wall at around 15,850 with a measured move to around 7,200-ish. Cool, okay, that looks like a wee bit more detail on the smaller time frames. Let's do that, let's do this, let's do what Zoner's saying here in a second, okay? If the 8 is above the 21, it normally means bullish trend. Perfect, yep. Do we want to put that, we want to put that in the qualitative box, just so that everybody knows this is the truth. I got these numbers the wrong way around. It should have been 90 instead of 45. Fuck it. 90. If it increases, I lead it goes towards 90. 45. There we go. There's the maths corrected. There we go. Right. Current situation then. This can go up towards the top in terms of those moving averages. 8 EMA above 21 EMA, good sign of short to medium term uptrend. That's the current situation. Okay, current situation in brief. Cool, nice one, excellent. Right, so next thing, Zoner, what did you say? What did you say, buddy? You said ascending triangle, sell wall. Now I'm going to skip the chat about sell wall, okay, just so you know. That's cool, and it's totally fine, right? I personally don't really look at the order book. I know a lot of other people do out there. For instance, TradeSpot, and like I was saying, he looks at it. You obviously look at it yourself, Zoner. Plenty of people look at the order book for various reasons, and the depth and the orders in the market and everything else. And it's a good thing to do. And a lot of algorithms and bots and whatever else also look at this and look at the nuances and the dynamics that exist in there. Personally, I don't. And that's just that. I just don't look at it. I just don't. I mean, that's an exaggeration, right? Because I will from time to time, and it'll be of interest to me, especially if it's happening right now in the here and now. Mostly in terms of looking for false signals, by the way, looking for the sort of it being a false positive. That's my general expectation of it. But yeah, I tend not to. I just don't ever look at it. So I'm going to skip that part. But I'm going to say at around with a measured descending triangle. With a measured move to 17,200. Let's try and figure out on the 4 hour. Sweet, you gave me a clue. I was about to look down to the. Thanks for that. I was about to look down to the one of these other things. Let's take a look at this, and let's do a little comparison as well between this, which is the Bitstamp chart, by the way, that I'm on. Oh fuck! The disappointment I've just experienced there is because I went and deleted everything off the Bitstamp chart. How annoying. How annoying. I said, should I do this, should I not? Then I went ahead and did it. Why on the Bitstamp chart, which I've been using since the start of this channel? It's had all of the drawings on. Why did I do that? God, that's frustrating. Anyway, half the time I do these things, the next time I load up TradingView, it'll have just reverted and I've lost all of the stuff that I did today anyway. So fingers crossed it does that. Ah, damn, that's annoying. Let me just see my object tree. Look at this, it's all gone, all of the stuff that I had. You know, the massive Gartley, the cipher pattern, the everything else is all gone. Lols to that one. That's funny. Right, anyway. I'm so frustrated. That's life. That's live for you as well. That's live streaming. You're looking at this area. I'm going to look at that in detail, and I'm going to look at it with a comparison with what we see here in the CMEs. Okay, fair enough, fair play. I think initial inspection shows us that there is obviously something slightly different going on between the two charts. So let's take a look, and also why not? Let's just have a look as well at what we've got on the go here in terms of the GBTC. I suppose, even though I hate this chart, it's always rank and it's a complete mess. Yeah, cool. So Bitstamp, where I deleted all of my historical drawings for the year. By the way, I mostly keep them on for the benefit of the channel, you know, so that we can look back in time and say, oh, what were we talking about back then, and whatever else. I don't really look back at them myself often. Maybe if I did more, then I would be more inclined to pay more attention to that sort of thing. So I'll use the triangle tool. Boredom. How cool is that? I guess you're talking about something like this. Now, I'm using the triangle tool here because it makes it so that it's harder for me to, you know, if I want to accommodate this lower area in here, how am I going to do that and allow your assessment to be accurate? You know, like something like this, you know, this is a little bit preposterous because that's not the shape of anything there. That's not that shape. Excuse me, by the way, if you hear construction noise outside. There's construction happening outside. So obviously you've got it drawn in from somewhere else, and I'm thinking somewhere like here, which gives you an actual shape of the thing. So obviously your sort of inception point of this is what's going to determine numerous different factors with regards to where we have this these points of contact. Okay. So I'm sorry to be splitting hairs when it comes to looking at a pattern, because obviously I could just chuck it on there any old way. I could just chuck it on like this and say, oh, look at this that we have on the charts right now. Oh, here we have an ascending triangle. Fair enough, right? Fair enough. But I'm wanting to do it I wanted to do this with a real to split hairs about it, right? Because that's what we're doing here. Otherwise, I just accept what you're saying and say, yeah, sure, I agree with you. Okay, because on the face of it, I do, right? On the face of it, I do. Except what I want to point out is this movement up the way with regards to the triangle in here, and asking about kind of, you know, what we're looking at in terms of this triangular shape and the context that we find ourselves in for this zone here. It's totally fine. You're right, by the way. It is an ascending triangle here. That's what that is. It's fine. and like I say, just to be clear, I'm splitting hairs about this for context and not to say you're wrong, because I'm saying you're right. So, whoops. So yeah, taking this triangle thing out here again and say, so how are we going to structure this in here, and what is the inception point of this line and the end point for us here, so that we can try and establish where we would have an apex on this thing. And as you can see, if we have it structured like this, let me get it up nice and big for us. If we've got it structured like this right now, we're already at the point where we're past 75%. Okay, this is it past 75%? 34 bars into a pattern which lasts for 47. So 3/4 of 45 is 30. Alright, we're at the 3/4 point now. So are we going to break up? Nice. Are we going to break up the conversation that you don't want to have with your girlfriend? Unless you do, in which case, man up and do it sooner. Yeah. So, are we going to? Could this be the case? If this is positioned, you know, like this as well, or whatever. Going to keep that side vertical. Going to move this. Keep that vertical. Yeah, that breaks through the bodies. Okay, here, that's as being as strict as we can in terms of this thing. Measure that again just to make sure. Obviously, it's a zone anyway that you break out from, so like 50 bars-ish, and we're into it 33, so, you know, we're 3/5 into it, so we're not quite 3/4, but we're 3/5 and then into it, so we're about 3/4 of the way in, so we're coming up to that zone. And of course this requires a couple more 4-hour candles for us to get up towards the top end anyway. Here's a couple of measuring sticks for us. Let's in fact combine this in two ways. So let's also at the same time do what? I don't want that. Well, we could actually. I mean, to tell you, that's essentially what you're looking at in terms of the move. I'll leave that on there. It's not what I wanted. I wanted a Fibonacci. Down to here. Just so we know as well the context of this what we're looking at here in terms of movements. But I'm going to borrow, this is what we'll use when we're discussing this in a second here, but I'm going to borrow this just for now to give us a 60%, well, I'm not borrowing it because it's the position the same way. Sorry, falling over my words. Look, we have this drawn in from the top down to the lows over here, but as you can see, this fully shows us the depth of the, I will borrow it. It shows us the depth of the movement towards the low side here in terms of, so I can get a bar which is 60% easier without having to measure. So 60% would be going up the way here. Excuse me. I'll check the. Keep your chat coming, by the way, everybody, because I'm going to come back and read your chat in a second. So here's 60%. So we've got two measuring sticks there, and I'll reposition my Fibonacci back up to where it should be, and pop these over here and take a look up to where we could be going, and these will give us a clue with regards to Fibonacci extensions and everything as well. So I'm just going to completely ignore that sell wall chat. Actually, no, I won't. I'll not ignore the sell wall. I'll just highlight the fact that you said the sell wall was in here at the top end of the ascending triangle, which is what I assume you meant, by the way, Zoner. Essentially, you know, this is where your sell wall is, right? In here somewhere. I'll take away that line and I'll say it's in here in this red section above the move, or it's coming up somewhere between the ascending triangle and the top end of this area. Okay, so what you would have here then, if on a normal sort of rocky outcrop episode, what I would do is I would say, what I would say is we have an ascending triangle here, and you know, any movements past this zone, of course, could be signs that we're having a breakout. There's two things I'd want to see. Number one is volume coming in here at the time of the breakout. Number 2 is whether or not we're able to push past the 100% zone of this Fibonacci retracement, where we would clearly have fake out territory coming in where we had that previous wick. Therefore, you know, any movements up towards this zone, blah, 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 blah. And then, of course, it makes sense that there'd be a sell wall. But it's not a sell wall. It's just that some people have identified an area, you know, in the charts where you could get a reasonable expectation of a failed pattern, and then of course a sell wall, right? If this is a sell wall, if they sell it, right, it means that they have a position that, to balance that position out, because they've sold, means they need to buy to close it. Okay, they would need to, if they sell it, they need to buy to close it, right? Just so you know, they need to buy to close it. So say they had a stop loss on here as well themselves, and they decided that they were happy enough to take a move. Let me just get rid of all this, in fact, for now. They were happy enough to take a move. I like discussing this stuff with people, by the way. I mean, this is all this is how you develop as a trader, learning these sorts of things. So, like, you know, you come in and you say ascending triangle, sell wall at this point, blah 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 blah, and you know, you think to yourself that the sell wall has any significance to it in and of itself, and I don't know what your personal thoughts on that were, but for me personally, if the and for the person that has the wall as well, it's how they're looking at it too, and professional traders, what they're looking at is saying that if they were to short it here, and then they had a short position here, for instance, and I'll just pop it here so you can see, and then they decided that what they wanted to do was to take it back down to the 618 that we were at before, right? So let's just leave this where this popped in at. Then roughly, you know, what could you be looking at in terms of risk to reward for them if they wanted to go for something like, what number do you want to say? Anybody can welcome to suggest risk to reward ratios that you particularly like using. Let me know what risk to reward ratio that you think about it makes for a good trade yourself. But let's say that they had a risk to reward ratio of 5 to 1. Right, 4.98, that's going to be close enough. Then what you could see is then that there's a sell wall here, and that's visible. Then there would be a buy potentially coming in here, right, to go towards the top side then, to cancel out that position, because it's now not worth the risk to reward anymore past that point. Okay. So then what does that mean in terms of volume? We'll say that it was 1 million contracts that they bought, right? They sold 1 million, right? Just say they sold 1 million, right? Then to balance that out, they then need to buy 1 million. Okay? Then they need to buy 1 million, which means you've got 2 million in terms of volume, right? In terms of volume, your volume equals 2 million, okay? Your net position size, right? What does that equal? 0, right? And the volume candle down below is bigger, okay? Bigger volume candle, because this is what represents the volume. Okay, net position size 0, which means you have open interest remains static. Okay. So what value is a sell wall on the order books in advance in terms of understanding anything? Near 0. But also the understanding the dynamics that exist between sort of open interest, the volume candles that you see, and the reasons why you would see a volume candle coming in to signify that there has been a breakout, and what that actually means, that's important. And when people, like, you know, because you'll have people on YouTube that say, look at the volume here, look at the amount of people that were buying Bitcoin here. Look at how many people wanted to get in on this. The volume has gone crazy. It's crazy volume, right? when you bear in mind what I've just run through, then you can see that volume in and of itself doesn't mean anything. Just like the Chinese named person earlier on said about how you would like to see volume, because we all know about how whales operate, and that's very true, and this is how whales operate. So you'd want to see volume coming in as well. But then you see this volume that was here, right? See this volume that was here between, and you see these two candles that happened then in around this zone here. Then you know, if I put in an open interest oscillator, are we going to see much change in this zone here and whatever else while we're in this range, etc., etc.? And you can see then that that's not important. So when it comes to looking at the standard deviation of large volume spikes, what does that mean in relationship to the overall average of volume? That's a very interesting dynamic as well, because what you have here is somebody who could very easily have opened and closed a large position and it had zero impact, and but overall we did see a rise in the volume at that point, and that was interesting. Over here you can see that there's big things, and you can see that there was a rise in volume over here. Now over here you can see there was a big spike during this part of the thingy, but actually what you can see during this period here is that there's been a reduction in volume overall. So if you can imagine that the retail person that buys it here and then sells it here is going to not incorporate both of the up part and the down part into the one candle, making it twice the size as it otherwise would be. Instead they have one candle for that and represent part of another candle later on. What you want to see is the average volume moving up as opposed to the standard deviation points. And that's why when you're looking at a pattern breakout, it's exceptionally important to be able to say that there's volume coming in there, because without volume, what you're having is people having not put their money where their mouth is and then decided to go back to net neutrality or whatever, right? And net neutrality, that's a funny phrase, isn't it? Obviously, I believe in net neutrality, and it's got nothing to do with positions. It's about freedom of information on the internet. But yeah, also net neutrality. I'm going to jump back over to the chat box and see what people have been saying. Right, okay, Zoner, yeah. Oh, sorry, no, we've not finished off what you're saying. I'll come back to the chat box in just a second. Still, at the minute, discussing this idea here. Measured move to 17,200. Let's just check out and see if you're right about the measured move numbers. Let's just see how this pans out, and let's talk about a reasonable way of getting in and out of that trade, or whatever you might want to be doing at that time, and how you would manage your risk about it. Okay, so here's some freebies for everybody. Groovy. And this is freebies sponsored by Zoner. Couple of things of interest, right? With regards to this ascending triangle, which is clearly characterized by these wicks over here, that the measured move from it, if you were to get the full thing, takes you up to 17,331. I'm not sure how you've drawn your one in which that in a way that you could get anything different from that in terms of if you're using it at the most extreme point. I don't really care. Nobody really cares. This is the inherent subjective nature of trading. So you're looking up to that, whatever, who cares. What's significant along the way, though, is that you've got a 1618 Fibonacci retracement point in here at 16,992. That's just shy of 17,000. That means that a clear profit-taking value, a profit-taking area zone, a PTZ, comes in here at 17,000, clearly on the way, whereas this is like the most hopeful outcome from a move from this in terms of any immediacy from it, and that would be a more sensible area to do it for, right? In which case, if you are looking all the way up towards that zone, and if this is your trade, and I'm not going to take it as high as that, I'm just going to take it as high as the 1618, and you wanted to have a risk to reward ratio, for instance, on that trade of 5-to-1, then you could have a stop loss, for instance, $197 down, 1.273% at 19,000, at 15,000. What is that? Where's that 19,700 come from? I rarely use this tool, by the way, because whatever. So it says 19,700 there. Oh, is that the top end? No, I don't know. I don't really care. You'd be looking at that and saying that your stop would have to be in it around about just back within the zone of the, to keep it as being 5-to-1, you could have it just within the zone here of the ascending triangle, having taken it from the point at which you're getting, going past the fake out zone, if you wanted to measure it this way, if at this point here you see volume coming in, bearing in mind everything that we discussed about the volume just there now over the last 10 minutes, then you'd have a good trade, okay, where you're talking risk to reward working out for you. And this would be a much more sensible place to take profit. I'm not a financial advisor. None of this is financial advice. I need to say that. That's the rules. But this would be a far better way of doing that than it would be to stretch it up a bit. Now, if you were to stretch it up a bit, then you're looking at, you're taking profit up there at that 17,200-ish area. It means your risk to reward ratio suddenly becomes 6.4. So let's say that you wanted it to be 5 instead. Then you could tolerate movements back down after having come up towards this zone, back down towards 15,709. Okay, so let's just discover a little bit more about the risk of that if you were to do it. Okay, if you were looking at it like that, what you would then be saying is that you have at what point here does the risk really come in a bit more? Apologies to anybody. By the way, if you want to put any more comments into the chat box, I will come and read them all. I'll read every comment that comes in here when I do make it back. I'm just really wanting to do this thoroughly, because what's the point in doing any of this if you don't do it right? This is doing it right. If you thought you were doing it right before and you weren't doing stuff like this, you were leaving yourself short of doing it right. So you might as well just do it right. Let's do that now. Only takes another couple of minutes just to finish off this point here, just in terms of, and this isn't even anything particularly special. This is just to put things into a context. You can use whatever context you want to use. Could be that you're looking at moving averages at the time, for instance. I'm talking about it like this. So if you were to have got in at that line there, right, then when you see the prices moving back down below, where's my I'm going to have to hide the other one. Just remove it, fuck it. If you were to see the prices coming back down, using this wick down here up to here to form a Fibonacci, if you were to see the prices coming back down below 15,595, then you would have already stopped out. But that's also a very, very common retrace point. So at that point, you're looking at a little bit more difficulty. Obviously, if you play it from the top there, then you can see that the top lines up perfectly with the 236 over here. If you're to be operating within the wedge, itself, and that would be your risk to reward on that front. If you were, and then you would know that you could be going down a bit more, leaving you with this zone here where you've had to experience loss, and then it goes that little bit further, then it reverses against you, and that's where that trade kind of comes from. And the reason why you've got this zone down here, where you didn't stop out until it got down as far as this, is based off of the risk to reward, okay? Whereas, you could come down to here and give you another opportunity to open up that trade again, in which case, cool, maybe that's what you want to do. I'm not telling you how to trade. I never tell people how to trade. But this is a discussion of different ways that you could approach this situation. But say, for instance, then you instead of taking that and you went for that 17K area, where's 17K here, around about there, 16,99999, and then you wanted to have 5 to 1 as your risk to reward ratio, so you're looking up to there. Then instead you're stopping out a little bit higher, so and then you'd have this movement down the way, and in terms of percentages, you'd be looking at the movements coming down here another 1.5% before you got in, and that might offer you up a better way of managing that risk in terms of being able to stand at the sidelines until you see how it responds here at the 236, in which case if it came back down, pushed up again, whatever else. So so what I'm trying to say here is that your tolerance for loss is increased directly proportionally to your greed at the top end, which means the amount that you could lose by a wrong decision is directly influenced by the amount of greed that you feel with regards to how much you want to take at the top end. Okay? So then if you have a slightly shallower profit taking point, and therefore then have a slightly shallower tolerance in terms of your risk, it means that you've got a bigger zone between your risk area and the subsequent following on level of support where you would naturally be looking to in order to to re-enter the position. And when you think about the way that people lose money, perhaps yourself, it's through attrition of their accounts that they lose money when they're trading sensibly. In which case, you're best to try and limit yourself so that you don't experience too much attrition. And attrition is in this red zone here. The bigger this red box is, the more you're having drawdown on your account. While this line here, isn't changing as a result of that if this were to be a failed move, given that this is your entry point right here. And very rapidly after that point, you would know whether or not you were right. And indeed, you would be able to put a stop into profit, even if you turned out that you were ultimately wrong, if this is what you were doing. Therefore, you're looking at a difference between somebody who's not greedy, who on the one hand maybe puts a stop in profit, has a stricter tolerance in terms of the attrition on their account and their drawdown, and then is also more likely in order to receive, because obviously any given area up there is speculative, and the closer it is to the current price, the more likely it is to be met, and the risk to reward there is still pretty healthy. The same risk to reward on both of those trades, whereas really looking at this one, the risk is very different to the other one. The risk is actually increased, while the reward in terms of subsequent movements towards the top side is small, because the difference between taking at this price and taking profit at your top price is that same 1.5%. Okay, so what you're saying is that I want to risk this. I want to risk this trade. I want to risk this good trade here for this 1.5%. Okay, and at the same time, I'm going to eat this much more risk on the in order to do so. Whereas a trade which is coming in and taking profit here with a far better risk profile on your trade versus with the exact same risk to reward ratio is a hugely different outcome for your account in the long run. If you look at it like this, always. That there in itself, what I've just run through, is like an educational course in and of itself. I think that I don't know how many people are watching the stream right now, or if it's even working for that matter. But yeah, that's probably one of the best educations that you're going to get in terms of risk to reward and how exactly the dynamics of that work. So yeah, let me know in the comments down below if the video is still working perfectly well. I'm going to read some more of these comments just now. So we have a name here. Can't tell what script that is. Looks maybe like it's Thai. If it's Thai, let me know. Right, let me just read the rest. 3000 Trin says, no, we're a bit higher. Okay, TradeSpot said, ascending triangles are better monitored with the accumulation line as opposed to selling points in my experience. Okay, cool. That is to say that perhaps we are in a symmetrical triangle that is yet to define itself, and the problem that can cause are avoided by focusing on the support rather than resistance. Good point, fantastic point. Really, yep, cool, good one. I often talk about the gestalt nature of these patterns and how they change from one thing to the next. We'll check out the CME charts in a second as well. 3000 Trin says, sup dude, sup man, nice to see you, good to see you, nice to have you here, thanks so much for being a part of the stream. TradeSpot says, currently the CME chart is a little foggy on the ascending nature of things. Indeed, that counterpoint to the ascending triangle argument I imagine Rocky will cover shortly vis-a-vis the CMEs would necessitate a focus on 6,200 more or less on spot prices for potential pullbacks takeout area. Okay, that's a complicated sentence. We'll cover that in a bit. We have the Thai write-in. If that's Thai, let me know. Bit come up or down. And if you're Rainer, by the way, Rainer, I think we all love Rainer, who does videos on YouTube, then hi guys, and thank you for joining me. I know you're not Rainer, but imagine you were. That'd be funny, wouldn't it? Bit come up or down. You think it is good time to get in bit, or should I wait? I kind of covered that with regards to this potential trade setup that we talked about there. Now, personally, no. No, I don't. I don't think so. I don't think so. I think it's better to wait. If you're talking about this from a point of view of you're happy to wait for 3 months, yeah. Let's see how things go. If not, good. Yep, plenty of things to be said here about this. But if in terms you're talking about it in terms of the short term. Right now, where are we? We're in the middle of this pattern that we're talking about here at the minute. not great. This would be a much better price to get in at. This would be a better price to short it at, depending on how you're looking at things. Trading within the range itself is a better bet than trying to take a punt from right here with the expectation of moving up the way. However, we are at the point of which we're got 3/4 of the way into this pattern, and if you wanted to take a trade whereby you had to stop out with the same risk to reward ratio from here, what you're looking at is, if I just move this to 5-1, we move the bar to buying it here, and then say that you're looking for profits up towards that area, blah 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 blah. Then 5-1 profit. 5-1 means that you end up, see, this is why it turns out to be bad, is that you end up having to stop out of your trade at the most likely place for the prices to turn around if this pattern, which it turns out to be real. Now, you'd be taking a trade off here off the back of believing that the pattern is real, then you'd be having to eat your loss at a point when your maximum emotions are going to come in and say, it's real, this is where it turns around from. Okay, so you're saying that perhaps you're wrong about the pattern because it's now in this zone here of potential loss. So if you're perhaps wrong about the pattern, you're also then, your need to stop out comes in here at the point at which you will be 100% convinced that the prices are going to turn around, which means, as a relatively new trader, you're not going to stop out, which means that your risk to reward, right? This is how this works, just for people to know. Your risk to reward goes completely up the wazoo. What you're looking at that point is a risk to reward of what? Rapidly it sinks down the way. You're looking at a risk to reward of, I've got the wrong Fibonacci on here as well at the minute. No, I don't. I do. Well, yeah, to make this point, it's the wrong one. You're looking at a risk to, for instance, say they'd come up towards these zones and back down again there afterwards. You're looking at the potential for us to go all the way down as far as something like this before it turns around again, okay? And if this happens, then this is what your trade is. And your risk to reward ratio is 1.64-1. And that's not a winning strategy. And you will lose money, most likely, in the long run. The markets will take your money from you if that's how you trade. So to answer your question, is this a good time to get in? Absolutely not. If you think along Hebrew, cool. If you think along those lines, then can you understand how the risk to reward, how that attrition happens? Now, this is me putting a context onto an assumption that I'm making. So two things. One, I apologize if you're not a new trader and you are aware of this. And two, if you're not aware of this, then take the lesson on board. This is a demonstration visually for you about how things can go wrong in your account and why sometimes perhaps after a position has moved towards the top side, you think, why did I not make as much money as I feel like I should have, when ultimately things went to where I thought they would have in the end anyway? Because if the prices go all the way up towards 17,000 and you're looking at having only really made, this, then you're going to think that sucks. Right? Now, you could say there's two ways of looking at that. No, I will still have made a better risk to reward. You won't have. This is a fallacy. You just convince yourself of that. That's very human. It's where a lot of traders go wrong. Then there's the other side of things, is that no, I wouldn't, because I would be buying back in here, which would then reduce because I would dollar cost average into my position, which would change my risk to reward ratio. Okay, fair enough. Let's discuss that then in terms of where that puts your position. And we would have to see if you look at the risk to reward ratio number here changing as I move this, you'd have to see your average entry price. So say you got in there, you'd have to double your position at the maximum away point here to bring this down to the midpoint. So let's just bring it to the midpoint. So you now increase the risk that you've got by double, like the amount of that money you've put on there, and this is just doing it once with one. You're not scaling in, you're just doing one change to get to have a risk to reward ratio which is even close to being 5 again. You'd have to double what you've been putting on the table. So do you see how this leads to people losing their account? Because if this doesn't happen, and then you make the same decision at any points down here, then even though you've doubled your position size, your risk reward ratio goes suddenly down the way, and then you'd have to double it again from there. So we're talking 4 times more than you originally put on to bring it back down again to being within a reasonable zone, and it never gets back above 5 to 1. We're not going to see that unless you put way more than double in, right? So do you see how that attrition happens? This is one of the key lessons. This video, by the way, it's live. I'm going to not put this, I'm going to remove this from the channel. There's far too much good content here in terms of free content for people and educating them about how to be a trader for me to leave this for free forever. So this video will be public for until maybe December, and then I'll make it so that it's members only, because there's far too much. You don't see this. You don't see people educating people on YouTube about how to trade like this. This is paid course material, you know, obviously. So I'm not going to leave this for free forever for everybody, but we're here together doing it now, so it's good. That's good. Right, cool, nice one. Let's catch up with the chat again. Nice, very much. Good to know that that's Hebrew. That's really cool. So that's what Hebrew is. I wonder how you say that. Shall we just look up your name? Let's just do it for everybody for fun, right? Hebrew to English translation. This is a bit of fun for everybody. Enter text Hebrew. Ciao. Let's see what your name is. Wild Leaves. I love foreign names, by the way. Wild Leaves. Look at that. Quality, right? Quality. Good stuff. Anyway, bit of fun. I appreciate people's different cultures and languages and stuff like that. Always do. That was fun. Right, let's see what we've got here on the go. So, Susan says, it's a question of risk, Wild Leaves. That's so cool. How do you say your name? Say it.
Wild Leaves.
No, I know how you say Wild Leaves, you dickhead.
Wild Leaves.
Wild Leaves. No, tell me how I say it. How do I say this? Whatever. You normally get to say stuff. If I type in sorry about this to everybody who's not interested, but I'm interested, so you're just going to have to live with it. If I wanted to do it this way round, Hebrew to English, and then I say
Wild
English.
Leaves.
So I want to do Hebrew, and I want to be able to say wild. Why is it not giving me the way to pronounce it? Whatever. I don't know. Anyway, you wanted to be able to pronounce your name there. I'd have probably fucked it up anyway. Cool, nice one. So Susan says, it's a question of risk, Wild Leaves. Do you want it now for small move, potentially losing your trade, or would you prefer to wait and get in at a lower price with a lower risk and potential? Yeah, thanks, Susan. That's right. I'm just after discussing that in extreme detail. I'm looking for a long, but the bit fell to 13k. It would be a larger profit for me because I think it'll get to 20k. Cool. Okay, so you know you've got an opinion there, and you've probably based that on a number of different factors. Oh, I've got the Discord. Oh, by the way, shout out to everybody. If you want to join the Discord, you can. You get to talk to me in here, and it's great, and everybody loves it. And people like Nav and Ethan, really, really great people in this group. Dom, TradeSpotting, everybody that's in here is wonderful. And Bran, where are you, Bran? Why are you not in the live stream, Bran? Jeez, Bran. Let me go back over to where the hell is this thing? Oh, by the way, if anybody's interested in seeing my YouTube stats or any of that sort of stuff, by the way, I can also show you all that sort of stuff. Eile, is your name? Is it like Eile? Eile? Type it in. Is it like Eile or is it like Eile? Let me know. Right, cool. Anyway, I am looking for a long. Yeah. Okay, so you've got your opinion and you're working out based on certain things. Do that sort of analysis when it comes to choosing your positions. You know, where you're looking at the risk to reward, what would go wrong, how would you respond to it afterwards, etc. Eile, I'm going to say. I think the yes must be to Eile. Yeah. So Eile means wild leaves in Hebrew. So now everybody watching this has learned at least one thing, right? If you ever go over to Israel and you see and you're sitting in contemplation, and everybody thinks that you're just the quietest, most contemplative person in the world ever, and then it gets all the way around to autumn, and the leaves blow off the trees, and nobody's heard you say a single word for 6 months by this stage, and then somebody's walking past and they hear you utter Elay. Then they'll think, fucking hell, that guy's look at that, he must be a philosopher. But of course, you know, it takes a long time to do that, so I wouldn't recommend it. Right, so yeah, you do that sort of analysis. I think we kind of covered it off. I mean, if you're looking for a short-term trade or whatever, then cool. I mean, the most basic type of chat here is that movements above and below this area, while looking at the range of where the prices are currently, is the easiest way to trade at the minute until we move beyond those zones. Cool. Right, yeah. A question of risk and a matter of patience, one might say. Yes. Nice. Thanks for the in-depth analysis, Rocky. Zoner, you're welcome. I don't know if you've subscribed to the channel or not yet. If not, then do it. Yeah. And then tell your pals and tell everybody. And then, get a tattoo. More like Eli. Oh, Eli. Oh, like Eli. Oh, tons of people are called Eli. Like Eli. Like how everybody's called Eli, right? That's a real common name, right? Have I got that right? Eli. Who's called Eli in the world? Eli. Who is the last Eli? Boardwalk Empire. The TV show Boardwalk Empire had a character on it called Eli. I'm pretty sure there's other people. Right, cool. Anyway, you'll know more than me about famous people called Eli. I'm sure there's like, I'd kick myself for not remembering. I'm sure there's tons of them. That's cool. I'll not remember what this looks like in the future, probably. And by the way, is it right to left? Would it be reading it right to left? I think it would. I don't know. Yeah, probably. Anyway, whatever. Yeah, so nice one. Wall Q says, on point as usual, risk management is the difference between continuous profit and gambling. That's it. Wall Q, well, I'm glad that resonated with you. Darshan Darshan, I got that part easy. Chaudhary is asking about Litecoin. I'm interested in Litecoin currently myself at the minute anyway, based on a sort of little feeling I have inside my heart that I've not looked at it for a long time, and I wonder how our brethren out there is getting on in the world. So let's check in with our pal in a minute. Darshan, I will do that for you soon. 3,000 Trin, yo, good stuff, bro. Yeah, really, cheers, by the way. I appreciate it, really do appreciate it. Anybody else? Chuck your comments in there, by the way, everybody. I will read them and come back to you. And I'm not making it members only in terms of requests as well. I could do very brief technical analysis. I've kind of gone off piste, haven't I? And we started off with this big weekly LTC chart shows bullish. Okay, cool. Started off with this big discussion and how we were going to take notes, and then I've kind of gone on a bit more about different things. What I wanted to do then, I suppose, here, if I just hide all of this for now, I'll take a look at the additional moving averages just to kind of put this into context for us right now. We can see that the 56 here, or the 54, is coming in at around about the previous low. The 36 is coming in at around about the previous low, and the 18 is coming in at around about the previous low over here, or the 21, sorry. So what you've got, wait a minute, that's 21. Yeah, I'm going to change this back to 18 for now because of the atomic numbers, just remembered. Peter Brandt doesn't use it because of its magic atomic number thing. He just uses 18, but anyway, I've changed it back to 18. So we can see these lining up perfectly. So if you're ever interested in about, how you can do technical analysis without needing to draw patterns on and everything else and look towards your previous ones, just having a little series of moving averages like this on the chart can make it quite easy to identify key areas, for us. If we see the prices coming down and testing this line here of the 54, then that's fine. Looking back the way, it's fine. We've had that frequently. But what we haven't had is closes below it. Apart from in this section here, you're getting, if we see closes below it and then these move down the way and start to sort of do this thing where they all spread out like this, and then you've got a bearish formation on the charts like this at this point, then look towards downtrend at that point, obviously. But yeah, and then as we can see, in terms of lining this up with this movement, if we come up and we come from this low, this is a speculative Fibonacci that I have on the go here. This is drawn in from this low up to that area that we said would be where you could potentially enter or exit a trade. You can also short it from there, by the way, like the sell wall that Zoner pointed out. So if you were to have shorted it from there, clear profit taking target would be down there at that 618. Let me just stick a short on here. If I just flip that, no, I can't. Yeah, no, that is a short. Great, excellent. So your profit would be down towards here. Your risk to reward ratio of 5 to 1. Say you wanted 5 to 1, you'd have to be. You could be quite. You've got a lot of girth here in terms of where you'd flip. It'd take you all the way up to 16,160. So you got $200 move here in terms of any flux that you could have, with a nice easy target down here. Nice 5 to 1 risk to reward ratio coming in for a retest of this pink line. You would have got that sort of a move here. You would have got that sort of a move here between these two zones. You would have got that sort of move here. In terms of 5 to 1, risk management is what people love to see, and everything else. If I chuck this in at about 5 to 1, then as you can see here, you're getting from that point there down to this point here. You've got a risk reward ratio of 6 to 3. You can manage it with your risk to reward ratio goes all the way up to 5 at here. Incidentally, if you had held on to that position looking and being greedy and wanting more, you would have ultimately have been stopped out again before the price is moving against you. So anybody who has that narrative of I got into a trade here, I should have taken profit here, and then I stopped out here. That's how that happens so often. I think this might be a reflection towards people put things into context. People might have even have done this particular trade even if you in terms of what greed means for you. If you're going to be risking things like here and in terms of where your stop is, you should be taking profit around about here. Not financial advice, not financial advisor. If you then goes on up towards that area and you don't take profit at that point, then you're going to then need to remember that you've got another that if you're going to get another opportunity in here, that sorry, wrong way around on that one. That if you're going to get another opportunity in here at that point, right, then you're going to want to take profit at the 618 instead of where your original one was. So yes, your profit to risk to reward ratio diminishes an awful lot. It goes down to 2.27, and at that point, that's the best that you could hope to do. The best you could hope to do. Anything beyond that is extremely greedy. So if you were to be trading in this way and you don't realize this and you haven't included this in the way that you trade yet, you're doing it wrong. Cool. I need to just quickly look at the what the CME charts before I move on to look at LTC. Darshan, thanks for your patience here on this one. We're at this point here where there's no clear ascending triangle on the go. If I jump down the time frames, still it's not there. It's not there in any aspect that you want to look at it from. If we want to take a sort of little take it from that body, stick it to that body, extend the right. That's not going to work. If you do this thing here quite often in terms of just like what would be good. Now this is not prescribing it. This is not a good thing to do all the time. I wouldn't suggest you do this, but if you start off with the body and then go to your subsequent wick and you're looking for the third touch, this is an easy way of doing it, right? This is esoteric. I wouldn't recommend everybody does it like this. But, if we see a turnaround from this price here, it wouldn't surprise me. I've just extended this over, gone body to wick to then where the third point could be. Of course, we could fall away from just there. Moving this down the way, you can see that if we were to be talking about this from body to body to body, that we're breaking out of it already. I feel like that's a little bit rich, but if you were to be this sort of the most fair way of looking at it, then, or whatever, and you wanted to sort of go wick to wick, and then on down the way, you can see that we could potentially turn around from where we are right now here with just a little bit of a wick above it. But then that's when you start to get this conflict of wick, then a wick above it, which is why I had that story earlier on. But if I just leave that there for now and draw this in here, then you can see that what we have is a descending broadening wedge, which of course then is a continuation pattern, in which case you would be looking to take profits in here at this point here. So if any trades that we're looking to push past this point here should really be thinking along the lines of, is this long or short? Long. Should really be thinking along the lines of this being your profit taking line just here, really, realistically, and then looking here in terms of where you would stop out if you were to be doing something like this. Then you'd be looking at around about here, and as you can see, that is a highly likely trade to get stopped out on anyway, given that it's just within the body of the previous 4-hour candle. We don't see any shapes there. Everybody will have noticed I've not looked at the oscillators or anything at all today. By the way, this is the 1 hour time frame. You can see volatility was coming into store here. I wouldn't be surprised at all if we came back down and retested the 56 simple moving or exponential moving average as a result of having had this movement up towards the top side here with this volatility that we've just noticed on the background. In terms of the 4 hour time frame, by the way, in terms of the trending and what we're doing at the minute, we are moving towards the top side and it is decent. So if we look over here and say that, you know, our bodies right now look to potentially be closing above the bodies here, we could be coming in for a higher high at that point. So it's just like it's a bit tasty at the minute. You know, go ahead and do your own in detail technical analysis on that front. It's interesting right now as well. We're at 15,791. You know, the real question is then how will we respond in around those areas, which is the earlier chunk in that we were talking about with regards to that ascending triangle. I think that kind of really does cover Bitcoin technical analysis for now with regards to even movements beyond it. Now, I didn't move the measuring sticks down to the low side here in today's episode, just to see how things would go down the way. Couldn't really massively be bothered. Just be aware that if you were looking for a downward move here, you could be looking down towards 13,900, okay, at which point, big move. Right, so let's do it. Let's do what Darshan wanted to do. First off, by the way, I will say that we are looking at a similar story with Ethereum. That we've had this ascending triangle idea on the go, that we're just above this zone here of the previous body closes, that we're above my my wedge structure. Currently, this is not the first time that we've been up here though, so treat that with a degree of caution. And in terms of the pitchfork on this thing, you know, we're right up past the median line of this thing. If we want to see support at 454, then move towards topside thereafter, that'd be good. Clear profit taking targets coming at 489. And that just was a bit of context. Let's just see what the current price action is for Link in terms of, is this another one of these things? As you can see then, this is one of these days when it goes across the industry in total. Everywhere we look, we see the same thing. Again, the same thing over here with regards to Tezos. By the way, you might have noticed earlier on, that somebody said something about, I think it was TradeSpot, and said something about symmetrical triangle. Where is it here? That is to say, perhaps we are in a symmetrical triangle that is yet to define itself, and the problems that can cause are avoided by focusing on support rather than resistance. The inverse of that story quite clearly demonstrated here in terms of Tezos. You know, I talk about this, and the context that I put on this is always that this zone here, and I draw a box around it and call it fake out territory, which it quite clearly is, quite clearly operated as that today. But as you can see here, there you go. Then if you were to be focusing on, in terms of when you're looking at a symmetrical triangle, the fake out zone and how that could impact on things, it becomes an ascending triangle rapidly. That's what the evolution is. A symmetrical triangle becomes ascending triangle. Then your statistical likelihood of breaking towards the top side just increased, even though beforehand it was a symmetrical triangle and it was 50-50. You're now higher likelihood to increase to break out towards the top side. However, you need to see you moving past the fake out zone of the symmetrical triangle, i.e. really that's just the same discussion with, that's just going round in circles and using different words to do it. That's why technical analysis is so confusing towards beginners. This is advanced stuff. Nobody really does this. I've not seen anything of this detail anywhere on YouTube ever before. I ask people regularly in episodes, by the way, here we are live, if you've seen anything that's of anywhere near this depth in terms of discussion ever at all. Love it if you shared the name of the YouTuber here. They're not only for my enjoyment to check it out and see what they're doing, and to you know, be a part of this YouTube community and meet somebody who's, you know, doing similar effort to myself, and communicate with that person because I would like them to be my friend, but also for everybody else in the group here who maybe gets some benefit from it. So if you know anybody that's like that, please go ahead, write the name in, link to the YouTube videos that they have. I don't care. I'm not a YouTube monogamist. Go ahead, do it. I encourage you to. I just don't know them myself, okay? And if you do it, I'll send them a message saying, thanks very much, I got told you about somebody in my channel. Keep up the good work. Right, yes, so my man, Darshan. That's quite a good name, by the way, Darshan. I like it because of the sound that it has on the lips. Obviously, I don't say it retroflex. If you're from India or Pakistan or one of these retroflex speaking countries, Darshan. Darshan, you know, like that. I don't say it like that, sorry, but I think Darshan's quite a cool name. Where do we have Link LTC? I've got it on here somewhere on my list of favorites, don't I? Screw it. Let's just get it up here. LTC. Oh, by the way, you didn't specify if you wanted to look at it versus the dollar, so I'm going to assume that you did. Right, and we'll look at it on Coinbase. Sure. Maybe you'll even have some historical crap on here from ages ago. Yeah, I do. Old crap. Nice. It's always nice to see old crap. Like, a little bit of an analysis on this. Different story. Cool. Nice one. So did you notice how we looked at Bitcoin, talked about an ascending triangle, looked at Ethereum, said, same chat here on the go with Ethereum, looked at did I look at Chainlink? I'm not sure. Looked at Tezos, same story, yet again, moved the triangle, put the box around it, everything else. What do we see here? What do we see here? What is this like? Out of everything that we've looked at so far, this is surely most similar to this idea here. Obviously, this story is still very much evolving, and I'm more than happy to eat my own words and change it. I'm not the type of person who sticks by an opinion, you know, past the point of being wrong. One of the most important things about being a trader, other than being incredibly handsome, you know, is to be flexible and adapt. You know, so evolving story. Anyway, let me go back. Litecoin. Load up Litecoin, please, computer. Doesn't bode well for doing a live stream when my computer is not willing to load up the page. Obviously, my internet connection comes and goes a wee bit. I hope that that's okay for everybody. Right, so here we have it back in the game again. So as you can see, what we're looking at here instead is more similar to the other one, but if anything, you've got a few different scenarios operating for us here. Do we have a breakout in process? Let's just start off with the most optimistic way of looking at this right now, right? What you have is the potential of a sort of descending wedge, which is a statistically 60-40 split, more bullish than bearish price pattern. Pardon me. And yeah, could we be doing that right now, or is that far too generous? Looking at it that way, I'm going to identify this tiny volume bar that we have here, which would suggest to me that that is certainly, you know, a second point of show me that I've probably got a bias, although I don't because I'm doing this on purpose here with this one, and I'm going to have to accommodate then instead this here and acknowledge that this doesn't touch it and this is only 2 touches. Therefore, if this is a wedge, we only have 2 touches towards the top side, and that means that, you know, when in a wedge, if it's going to ultimately be a wedge, you're probably going to see 3 rather than 2. So I don't like this as a wedge for a breakout right now. If this is what it's going to be, I just don't like it. What else, though, could this potentially be, which is of interest for us right now? And if I just sort of level this out again for us and then and leave this as it is, then potentially we could be looking at a descending triangle, of course, a more negative pattern. And all it takes to accommodate that is to move this to go between the wicks rather than the body closes. Now, what is the significance of that? Well, it means that we've got body closures here that are lower than the previous body closure as part of this overall structure that we're looking at right now, as part of a sort of downward trend since having been in the highs on the November the 7th high over there in terms of this price action on the 4-hour candles. So what do we have then in terms of bullish or bearishness with regards to this low versus the previous low? And let's call it, given that this in this shape here, that we can see that we have a touch here and a touch here. Let's disregard this low, which is really just in between the two. Here's another basis for coming up with the decisions. Then and then oh, I've scrolled up too much. So you're great, nice one. People have put some stuff on there. Great, more. We need more. We need more. Mitch Ray, Crown Crypto, I know those two. I've also spoken to them directly, personally in the past as well. I've spoken to them about, I sent a message over to Mitch Ray telling him to keep up the good work, sent a message over to Crown Crypto telling him to keep up the good work, and I'm sure as, you know, in a couple of years' time, whenever I've, you know, fully established as a YouTube cryptocurrency technical analysis person, that the three of us will probably be those 3 that people recommend more. They're the only 2 that I've ever recommended on this channel specifically to people for technical analysis. Yeah, as far as I remember. if I've overlooked somebody, let me know. All right. Cool. Anyway, anybody else would love to hear it. So this is your last low here, right? We can say that this wasn't a low, this was the last low. This is it here, and this is then the subsequent low coming in over here, and it's lower on the what do we call them? RSI than it was previously. Stochastics, let me see. Now, as you can see, the stochastics had their low here, and then the previous low over here is very much lower. You can see here that this low, which wasn't a low, is higher than the previous one. You can also see that on the RSI, the low, which wasn't a low, well, it isn't actually higher, but it's convergent, but whatever. And then over here in the DMI, now we're on a downtrend in this point, and I'm looking towards the strength of downward movements. So I'm looking between this point here in the 7th and this point here in the 10th. And I am able to say that somewhat this is divergent. Now I disregard divergence, generally speaking, I'm not disregarding it, but I look into it with less sort of severity with or significance whenever we're operating in a period of chop, and where the higher of the two directional movement lines here with the yellow and the pink, so the negative one is below the yellow one at the minute currently. So this isn't really giving us a clear picture really at all. So while it's divergent, I would say that it's not particularly. And could we then see a pull back down towards this area? Overall, in terms of what we're looking at right now, especially when you consider things like the volume and whatever else, I would say that the most likely place for us to be going in terms of the 4-hour picture. By the way, Darshan, if you wanted me to look at it on a wider time frame, like the weekly or something like that, let me know, or the daily. This is just the 4 hours. I hope this is good for you. Let me know. My next target for this thing has got to be 2 targets. One, the 54 period moving average over there. If this were to come in as being a higher low, and you're looking at this section here starting to trend towards the top side, okay. However, I'd probably also look down to the lower end of this descending triangle, just in terms of the immediacy. And I'm going to put this squiggles into context by jumping down to the 1 hour time frame and pointing out what's quite clear really when you think about it and you look at it in terms of what's going on with this most recent rise up. Let me just get rid of the I have to hit back a few times here. The sweet, nice one, Sen Crypto. I actually think I've seen him on Twitter before. Sen Crypto, excellent, nice one. I'll bear that in mind. Maybe send him a tweet or send him a message on YouTube and say keep up the good work. I mean, there's other people out there that just don't do a very, very, very good job. I mean, one of the ones that I looked at when I started, who watches this channel, and if you're watching right now, by the way, nice to see you. Hi, mate. It doesn't do a particularly he does a good job. He does a very good job. He just doesn't go into the detail like I would, so I can't get any benefit from watching his stuff whatsoever for me at all. The only people I can get any benefit from at all are I've seen are Crown and Mitch Ray, because I have a degree of confidence that they're at least operating at a similar level to myself. It was a guy called Crypto Newton, for instance. He has gone up past 13,000 subscribers recently. I was quite surprised because when I started my channel, he was around about the level that I'm at now. Be interesting to see how quickly we grow. I expect I'll grow less quickly because of the emphasis I have on doing things properly and whatever else. He's kind of slightly less like that. Another one that watches this channel is Tyler S. Hi Tyler, if you're watching, by the way. Good guy, really nice guy, good presence in the crypto community. Does a lot of good work out there, enjoyable videos to watch, all that sort of stuff, really good. Thousands upon thousands of subscribers, like over 30, 40, 50,000 on YouTube, whatever. He watches my videos though all the time. He doesn't do day trading, and he takes he takes what I say and it helps inform him with his one. And I can't really watch his videos because, in all honesty, he doesn't, like I say, he doesn't have the same mindset as I do. I mean, he doesn't think that day trading, for instance, is a good thing to do, whereas that's what I do. So we're kind of diametrically opposed there. I just think that he's probably a really nice guy. Another one as well that I would mention would be Chart Champions, Daniel from Chart Champions. I actually think he's a good trader. Nothing that he says is of really any interest to me whatsoever, though. And I think that he's probably one of the nicest guys on YouTube. But he's also probably the biggest asshole on his channel. It's really, really funny dynamic. You can watch it if you like. You'll be watching this guy and you'll think, God, what's wrong with this guy? He's such an asshole. But in actual fact, I think if you read between the lines, you can see that he's quite a nice guy. It's like a little bit of a UK thing. I think that if you're from a foreign country, maybe you'll just respect his confidence or whatever. But if you're from around here, I think you can tell that he's actually a nice guy who has to come across as an asshole to be able to achieve what he wants to achieve on a daily basis. It's kind of funny. Yeah, anyway, down on the 1 hour time frame, if you look at this, Darshan, you might notice that we've obviously pulled back from it at this point here anyway, but you'll notice that we were in a phase of an ascending wedge kind of during this period as well, where you've got your 1, 2 and your third touch on it there, bringing you down towards these lower areas of 59 or so if you're just looking to re-up. Movements outside of this zone can take you either direction. You know, if you were to do a measured move off the back of it, I'm going to have to adjust this so it doesn't extend. There we go. Then I'll change the colour of it too for the crack. Then you could be looking up towards, you know, the 63 area, or indeed if you're to break down below it towards the downside, you could be looking down towards the lower end of that triangle. You know, obviously you can't predict the future. There's no such thing as predicting the future at all, by the way. And although it looks like that I'm kind of hinting at being able to do that when I say how I would rather get in down here and this would be a far better position for a trade, that's not predicting the future. That's simply looking at the risk of things and saying that any movements beyond this zone at the minute represent a far higher degree of risk than movements up towards that zone do from any point further down logarithmically. As you look across that list, as in towards this side on the way up, it gets exponentially more risky, logarithmically risky, exponentially less risky, logarithmically more risky on the way down, whatever way you want to look at it. Cool, nice one. I'm going to check back in with the chat again. Does anybody want me to look at any other coins, by the way? Let me know. Darshan, you said weekly chart shows bullish. Damn it. Wait, you wanted to see weekly. Okay, so we're not finished here on weekly on this. I've got a load of crap on here. I don't care about it so much. It comes from old episodes and times when I've looked at things. Is there anything that's from this old stuff that's... Nah, screw it. Ditch it. Right. Bullish on the weekly. Right, cool, excellent. Couple of things about this, as you can see. This yellow line, which is our smallest term moving average here, this yellow line here, it's had this bit of a fun time recently where it's crossed over these other ones and then crossed over them again, whilst we've seen that they've been positioned, all of the other ones, without having crossed in between times. So, if I just undo that, just in terms of this little bit of analysis, in terms of what we're looking at right now. So, if you're looking at this in terms of it shows bullish, it does, right? But what's different between this period here and the previous period here? What's different between the two of them? Well, obvious things come in is that we've not had a higher high quite yet. Okay, so that's one thing that's different. Another thing that comes in that's different, though, in terms of those moving averages, is that as you can see here, we have had a cross between the 18 period moving average and the 36 period moving average. Okay. So we've had a cross between this 8 crossing over all of them, which we had before. But what happened is that we saw it was rejected before these two were able to cross last time. It came down, flicked around each other, moved back up the way. And yes, we have had a cross. This is a bullish cross. It's nice to see. We want to then see this overtaking the 56. Link would be great. Martin Ogilvy. Oh, by the way, Ogilvy, some of one of the best surnames going. I'll check it out for you in a minute, but I'll also have to take a little digression in between to check out some of Ogilvy's adverts from the past as well. He's the very best at copy advertising, copywriting for advertising back in the day. Absolute hero of mine when it comes to marketing, so I'll just do that real quick. But yeah, so we're looking up here, we've crossed over all of this. this is good to see, but we're lower than we are previously. Obviously, we want to come in for a higher high. We've got a trend. It's still in chop land at the minute. We're pointing sideways in terms of stochastics. Oh, we're slightly up the way. That's good to see. We're coming in here and we're lower than our previous one. We're higher than here. That's good to see. So we're not divergent. So yes, the weekly is looking bullish. What we have then as well is lows, highs, higher lows, higher highs, higher lows, and then on up the way. That's good, looking bullish. In terms of retraces from where we were, this has not been drawn in exactly, I'm afraid. Just let me fix that. You can see that we have moved beyond the 618 Fibonacci retrace up towards the top side, being supported by that zone just now. That's good to see. You know, there'll be a little bit of a question mark coming in here as I draw in this next Fibonacci retracement going up towards the top side, because as you can see, we've been question marking this zone of 59.40 where the 236 is. That lines up perfectly with the analysis that we were doing on the 4-hour time frame, which I've now deleted, obviously. But as you can see, though, as you can see, the movements down past that zone will be taking us outside of that wedge and popping us back down towards, you know, the potential for coming in here and finding support. Of course, though, we could find support there and move towards the top side. I agree with you. It's bullish on the weekly for where we're standing. We have high, higher high, and then not high. The warning signs coming for us in terms of this trend, right? Let's be aware of the clear warning sign that there is for us right now, right here. Let me get out this thing here and smack it on. There we go. Look between these two areas here, these two highs. What can we describe as in terms of this trend? Let's just bring up full screen. By the way, Martin, I will look at Link. I will look at Link in a few minutes. I'm just finishing off here with Darshan. What can we see here in terms of these positions that I've got on the go so far? This, and this. What are they? They are 3 lower highs. What can we say in terms of this area? Any of these, but let's call it that one. Then and then this one, what can we say is lower lows, right? So what we can say as well is that while we remain inside this sort of general, I'm not going to use that, I'll use a parallel channel for it, even though this is a slightly inappropriate use of a parallel channel. I could maybe use just give me a quick second here actually. I'll use a pitchfork for this one, as you can see. So I thought bad use case of parallel channel, pretty good use case of pitchfork. As you can see, that in terms of whether or not that's correct or not, the diametrically opposed position is no. This remains bearish until such times as we manage to move above this high, break outside of the pitchfork, go past various additional areas. Just trying to add on additional. There we go. And then go past the extension to the pitchfork area here, as you can see. So, right, if you want to be, so Darshan, I hope you appreciate that I agreed with you in terms of the concordance that we've struck between each other between the 9th of March, you know, since we had our ultimate lows and where we've come from right now. But what I can also tell you is that in terms of the bigger picture, that there is a negative case scenario to be bearing in mind here, and then that gets reinforced in around about this high here, which is high here and a high here and a high here and a high here, and this is higher than the previous high, and it's lower in terms of price action. So what you have there is hidden, I'll write it in with a text box, in fact, you've got hidden bearish divergence on the weekly. Okay, so that there may well, oh cool, excellent, Link's doing something. So that there may be of extreme use for you until such times, you know, just bear it in mind, till such times as we're above these zones, start off, you know, really, you know, 65 clearly, then 85, target source the top side, moving outside this pitchfork. Until such times as we've done that, we're in shitty land. Oh, check it out, that's where Litecoin is. I'll just have to change the color of this because I couldn't find it on my thingy earlier. I'll make it green or something. Yeah, green will do. So Link, so we're going to be taking a look at Link. I take it, Martin, let me know, did you want to look at Link versus the dollar, or Link versus Bitcoin? Of course, in my average episodes I look at both of them. Before we do that though, I want to look up Ogilvy advertisements. If you don't know about your namesake here, Martin, by the way, it's spelt slightly differently. You are IE at the end. Ogilvy is with a Y. So anyway, then you might not know about this Ogilvy guy. And back in the day, he was the one who basically invented adverts that look like this one on the left-hand side of this image, which I think my internet connection's going too slow for me to be bothered with loading up. Or I am the right-hand side. You know, this big, this advert, this structure in terms of advertising and the info and the editorial, and that is fantastic. You know, he's a hero of mine in terms of marketing from back in the day. Cool guy. He's something that you maybe already knew about. Who cares? Let's just go back over to the charts. So USD, here we are. Great, nice one. Let's bring it up. And we don't want to be on the weekly for this. Let's start off here on the 24-hour time frame. Lovely to see that we've come up towards this area. Isn't it lovely to see? So people who were unable to take profits there before have got this kind of coming up with a second chance. That's lovely. We remain within this. Oh, just bring up full screen. There maybe is too much mess on this. If I just hide. Well, before I hide the moving averages, 24-hour time frame. Yellow, green, blue, pink, spread out nicely, crossed over here on the 5th of November, back into bullish formation, regimented out the way, spreading out the way, increasing its moving average, divergence, convergence. It's growing, you know, it's going up the way, so that's good to see, and that's positive. Going to hide them for now, because it's too much mess. Have we got two Fibonacci's here? Just the one, that's okay. But there's this one here that's showing us annoying stuff. Remove that. It was an extension tool. Take this other one up towards our most recent high though, and say then as well, so long as we stay above the 786 on this one, we're doing okay, which is probably fairly self-explanatory. And where we are right now, well, yeah, you know, we've moved above 1270. That's really good. Target then, of course, does come back in there at our previous high. We could be looking up towards, you know, the top end of this thing. Little bit of a concern in terms of the Rocket Man doing everything a Rocket Man can. Feature here that we have on the charts with this sort of wedge-esque nature to this rise up the way, but that's been okay overall. Big volume candle just here during this thing, that's fine. I'll go down the way. Didn't know about him. What a legend. Absolutely. There you go. Check it out. Absolute legend. Definitely a legend. Right. By the way, apologies to everybody out there watching this stream who isn't called Ogilvy and doesn't have an interest in advertising, but you know, that was a bit of fun, I think, for everyone. Yeah, so long as we stay above the $12.70 area, we're doing pretty good. If we put the moving averages back on again, you'll see, yeah, you'll see that, you know, the 10, this is below there. Let's just look down the time frames and see if any of them kind of match up to give us anything. And yeah, you could say that they kind of on the 12-hour time frame, so long as we stay above the sort of these period moving averages. Little reminder for folk. They're the atomic numbers. 8, 18, 36, 54. That's what I'm just using at the minute, just for short-term aspect, looking at things. As long as we stay above this, you know, on the 12-hour time frame, good. If we do drop down below it, then of course a turnaround could come in at 12.14. You know, if we do go on down below that, 11.70. Those are the key numbers for us. We've known about these key numbers for a long time. By the way, as well, everybody knows. Yesterday's episode, more or less, for all of the coins that I did, really did sum up things for us. But we know that dropping down. What was I trying to say there? Essentially, if we drop down below 12.67, go drop below 12.70, call it. Yeah, then we could be looking down towards the next area of 12.20. Then I'll do a little sort of caret. No, but that means equal or greater than, so I'll not do that. I'll just do hyphen. No, and then one of these. Yeah, that's cool. That's they could be looking towards 12.20, and then if we were to go down below that, we could be looking down to 11.70. These are all the numbers that we're familiar with from the past. 11.70. And then if we did go down below that, then we need to see a turnaround coming in here at this sort of $11 area. Okay, so $11 if we see movements down the way, and we don't find support here at this point. Movements towards the top side, however, pardon me, 2 targets for us coming up. 1370 top side targets. 1370. This wedge sort of structure thing here is going to be in there at 1440, let's call it then. 1440. And yeah, that'll do in terms of the broad structure of things. So we know that. So we know in terms of where we are now, what we could be looking to really overall. This has been good. You know, this has been good. I'm not a massive fan of this top line of this thing actually. So while I just wrote that in as 1440, what I'm actually going to do here is take a parallel channel for this one. You saw me using a pitchfork in the last one where we're looking at Litecoin there now. I'm not going to do that. This is a good opportunity for a parallel channel. Here and here. I don't care about getting these things drawn in with any real degree of accuracy. I don't think that actually even helps people become better traders. And I think people who talk about things going to exact price points and stuff like that are morons. Personally. But that's my subjective opinion. So how does that line up anyway? 1440. Well, yeah, you know, that could be our next target. We want to see in terms of the structure of this thing. Let me just ditch the Fibonacci then from here and ditch our clear line. Well, actually, we know this is this line here at the 1170. That was obviously important, but that features in terms of this list of numbers now. So the main areas that we want to see the prices, you know, manage to stay above, obviously, are in terms of this parallel channel right now. And then the key areas for sort of breaking out past this to either side are going to come into play with regards to this parallel channel as well. So let me just get the brush out and kind of draw them in. And what we were talking about was 1440-ish as an area. So that would be a clear area for a potential turnaround. If we did turn around from that point there, then we're looking towards the median line. And I'll just actually go directly down instead. Obviously, my point here is that... oh, thanks very much, JCC. Really appreciate it. Yeah, obviously my point being here is these are time dependent things. So I'll just use the vertical down the way area to look towards these. Clearly, though, as time goes by, you know, these targets would change. It's there, so it would really be looking up towards here rather than here. And then if we did drop down the way, you could be looking towards here rather than here. So that's the difference between sort of 1070 and 1170. So there's a big buck difference in terms of these things. So I'm acknowledging that publicly now, but I'm going to go ahead and do that and talk about these 3 price areas. Should we see, in terms of the immediacy following on from where we are now. The reason why I can talk about these in a vertical format like this right now, in terms of being important for right now, is because these are actually important for where we find ourselves now. When we look at the sort of the general oscillations of markets here, if we were to do one, we have already achieved what we needed to achieve with this previous high over here, and of course then we could be looking down towards these 2 targets, and those come in at around about 1260 or so. So we have 1270 on there already covered, and we have this one towards the downside, and that comes in at 1111. So we've got 11 on there, that's already covered. So we already know what we were looking at in terms of this. Saying drop below 1270 is also saying taking out the median line of that parallel channel. So there's a degree of sort of confluence of factors for you. But what we're looking to as well is largely comes down to our previous high. If we're able to take that out, then we have a risk zone here in terms of getting overly enthusiastic, which is unfair to take on yourself as a retail trader. Okay, let everybody else, let every other retail trader do it, or indeed if an institution wants to come in or a big whale wants to do it for you, let them do it. This area represents far greater risk than trading above here or trading below here in this zone where our fake out potentially could be with movements past our previous high. Now if we do go up to this area here and push outside of the parallel channels are the type of patterns that don't really have measured moves off the back of them. You're just really more or less talking about direction of the market, and that's cool. And in which case, let's then, instead of looking for measured moves off the back of a pattern, because we're not just, you know, stuck narrow-minded looking at one sort of aspect of things, let's instead take a Fibonacci from the top, down to the lows here and make a comparison about where we could be going with regards to the 3 common points that you go to: 382, 50%, and 618 golden pocket zone. So taking that down from there to here and showing that in terms of those 3 targets, the ones that we've already hit so far already come in. So we already have these targets anyway, and they are encapsulated with this price. As we can see, 1371 lines up nicely with our top side target that we already talked about. And then of course then the 618, where does this come in at? And it's this point that we've talked about enough times on the channel recently as well, in terms of being our upside target that I've been talking about for quite a while. And in fact, what I'll do is I'll stick one of these liquidity zone boxes in here. People wonder what liquidity zones are. Might as well just go full education mode during this live stream. Liquidity zones is a concept that people talk about and think that it means something. It doesn't. It doesn't really mean anything. Most of the hard science type names and methodologies and rules with regards to trading are very much based on soft foundations. Liquidity zone, to find out where a liquidity zone is, you simply look back in the past and find where there was price action. A good tool for using that is the VPVR. So anyway, you see these things on charts like this, and Crown does it all the time, and I'm not disparaging Crown right now when I say this in any way whatsoever. I think I've already been, in terms of the episodes I put out on the channel and my chat in general and during this live stream alone, I've already been more than complimentary enough about him anyway. But that's all that is, okay? It's nothing special, it's just a zone. So so there we go, looking here, and as you can see, there's liquidity in and around this area, dropping down around past this zone. This would be the zone to be looking at, and I'm going to call this a liquidity box really for us. I would be happy, I would just want to point out that the risk, again, that you experience, and I apologize if my audio goes funny when I change my head around, but the risk that you experience trading in this area above here towards the 786, past this zone here, is far greater than your risk that you have up towards it. Taken in terms of short positions, long positions, then, in terms of that chat that I had here with regards to the risk and reward and whatever else, if you were to go long from that point there and decide that you were happy enough to let me just line this up properly. I appreciate that this is a sloping upwards angle, so when I draw this in, it's not clear what I'm talking about exactly. But say you were taking profit in around about that zone, and you wanted it to be like a 5-to-1 sort of risk to reward ratio, then you're giving yourself a chance for the prices to go outside of it and drop back in again, and then if they come down to the 50% and not find a bounce, you know, in around whatever way that you were trading it, then you could ditch your trade at that point. And note, this is beyond where we are just now, and it's in that zone of danger. If you're looking down towards here in terms of going to go long, got some activity coming in. By the way, again, everybody, bonjour Etienne, ça va? Etienne, by the way, Etienne, I'm going to give a shout out to Etienne specifically here. One of the first 50, I think, roughly, one of the first 50 people to subscribe to the channel. Let me know if I've got you confused with a different Etienne, by the way. I'm still here. You're 25. Oh, he's saying it right there. Etienne, legend that is Etienne. My very first French subscriber as well. Anyway, ça va, Etienne? Comme ça va? Tout bien? Right, so anyway, looking here, you've got a far greater risk to reward in terms of your trading here on this one. So we don't need to operate on that basis. You could be looking down towards the 5 thing, and really then this kind of comes back into the parallel channel to the 618 point of view. If you're looking at this around about now, you're kind of saying that movements down below the 21, the 8 period moving average here would be your stop out zone, because equally you could, depend on the timing of all of this, you could be looking down past the median line of this parallel channel, in which case there's no point in holding on to positions down here. We've already discussed earlier on about how that dynamic affects your risk and reward, and there'd be no point in holding on to a trade much past this point here if you're looking at this from the point of view of now, and indeed if you're looking at it from the point of view of the right on the 50% thing itself. That ties together more or less with where we are now and how the moving averages and all would work at that stage, and that would be far more advisable to operate along that basis than it would be to sort of try and hold out for a move past that. Of course, you'd have to reassess things along the way. Of course, you'd also move your stop into profit. You know, if the prices came up towards these zones here and you'd got in around about here, there'd be no reason to not have a stop in profit somewhere around about there anyway. If you wanted to, nobody would profit shame you. I personally never ever profit shame. It's something that you'll find if you actually work on a trading desk somewhere. It happens with inexperienced people, but really once you've got a degree of experience, you stop caring about that, and there's never any shame. Nobody ever went bust taking profits. Don't worry about it, and don't get too distracted by the fallacy of let your winners run. Let your winners run doesn't mean let your winners run like that. What let your winners run means is that that you've got a predefined idea about roughly what would be tolerable for you in terms of your overall risk to reward strategy across the long term. And that's how you do it, and you don't let anyone out there in the world shame you for taking profits ever on anything. Okay, and then your psychology will be much stronger as a result. I'm so glad to see Etienne's turned up as well for the French representing. So anyway, let me just catch up here with people. Ethereum just shot up, did it? Oh, so it is. It's in the 70s. So we'll go check that out in a second, I suppose. Let me just go back. Right. Okay. So we're back at when I was talking about Eli quite a while ago. What about Litecoin? Yes, Darshan, I did Litecoin. Blah blah blah. Appreciate your works. You're welcome, Darshan. Wow, 15,800. Oh, we're on it, are we? 15,800 for Bitcoin. Cool. We'll go back and check that out soon. Mitch Ray, Crown Crypto, do appreciate both those, and Ethereum shot up as well. Nice one. Wonder if we are breaking out. Coinbase hasn't gone down, so probably not. Joke. Actually, that's a really good point. Not that that's a real metric anymore, really yet, but the way it's been. Let us know. Are you able to withdraw from Coinbase currently? If not, interesting. Navanethan. Send Crypto's pretty good. Oh, we covered that earlier. Did Ogilvy's chat as well. Link testing 1330 resistance again. Good stuff. We've pulled back a little bit from there. Keep rocking. Cheers, JCC. Do it, bro. Thanks very much. 3,000 trend. Real talk. Thanks very much, by the way. Etienne, my friend, mon copain français. Ma copain français. You're a guy, so I'm going to assume it's mon, but I don't know. Mon ami. Actually, I should have been saying, I don't know, fuck it, I don't speak French, man, I'll not pretend I do. The Ire Gunner, oh, another Irish person, cool. An Irish person, but you clearly you're an Arsenal fan. Cool, okay, but really, if you're Irish, you're supposed to be a Liverpool fan. You'll know this better than I do, anyway. And apologies if I've misinterpreted your name there. Bet you I didn't know. Bet you're an Irish Arsenal fan. The ascending triangle is bearish, right? No, it's bullish, man. If BTC corrects hard, Link will drop even harder. Yeah. How do you unlock margins in Coinbase Pro? I'm not entirely sure. Somebody else maybe could answer. Trace Reaper, who's asked this question, if they know about how you do it. It's only up to 3x, which is more than enough, to be perfectly honest with you. So yeah, cool. I'm not 100% sure because I've not tried to do that myself. Okay, I don't actually margin trade on or leverage trade or whatever way you want to look at it on Coinbase Pro. If BTC corrects hard, Link will drop even harder. Yeah, you say that. You say yes, but at that stage it becomes more a question of will we see that on this chart in the long run? Yes, and we've had this downward trend here, but what we can see as well is that we'll go back over to Bitcoin in a second, chaps, don't worry. is that we have this bullishly divergent low coming in here on the Bitcoin to Link pairing. I wonder if we see Bitcoin tanking and Link being able to sustain its prices above $10. Admittedly, that is, you know, a chunk off here. We could see the dynamic changing. I think it's just specifically because you said if we see BT3 correcting hard, Link will drop even harder. It's like maybe you're right there. Maybe you are. I would hesitate to say that that's the case because you could find that that this performs okay versus the Bitcoin pairing. I would like to point out as well that in terms of the Tezos pairing, overall, I would probably actually like to see in terms of Tezos Bitcoin tanking. To be perfectly honest with you, that narrative of Bitcoin needs to go up for the other things to go up is false. Whoever you saw saying that is false. They don't know what they're talking about, I'm afraid. I don't mean to directly say that to you. If that's your own hypothesis, that's fine and that'd be cool and we could discuss that in detail and that would be cool. I would happily do that. But if you're saying that you've heard that other people say this thing about these assets and their correlation between them and how that would have an impact, it's a false narrative, which is a false narrative. Bitcoin was going up towards the top side and we saw these other coins just tanking versus them. What we want to see happen here is that if Bitcoin drops, that we have continuation here. By the way, this old arrow that I drew on from the time, I mean, I told everybody that Bitcoin would stop having as much of an impact on the dominance thing ages ago here. We've now dropped below, but we're currently retesting this moving average. If we come back down the way here on the Bitcoin dominance chart, you'll see the opposite of what you just said. Movements down below 64.42 here on Bitcoin dominance is actually really good for Bitcoin and for Link, and the easiest way to achieve that is for Bitcoin prices to tank. So let me be clear about that. Ruining the old alliance. Are you Davoricus? You Scottish, mate? I'm not ruining no old alliance. I'm friends with the French. Not ruining nothing. Yeah, cool. What was I going to check out? Bitcoin. Going to check out Bitcoin. So it's cool that we're here in a point of, we're in a point where we can discuss things back with the context of all of this shite. Sorry, excuse my language. From earlier on in this stream. Now it's been on for long enough. How long have we been going? 2 hours 42 minutes. Right. Okay. Look, everybody, get your comments in. I'm not going to be able to sustain this stream for much longer. Let's face it. Been at it for like 3 hours. So get your comments in. I'll read them all out and everything else. When we go towards the end, I suppose I can chill out with you for a second. What was that guy called that did the music, by the way? If anybody can remember from the channel, or if indeed you're watching, what were you called? It was like Fritham. I'm going to put on some Fritham music towards after we've looked at this for 2 minutes, I'll put on some Fritham. He's a subscriber to the channel, good guy, and he has music out there, so we'll do that. Irish, but live in Edinburgh. Oh, do you, mate? I live in Edinburgh as well. That's cool. Any buffering issues as a result of this. But anyway, then the plague came, everybody died. We decided that we would do is build a new city on... Reconnection successful. Oh, brilliant. Well, I'm apologising that so much of what you're having to sit there buffering up to watch is simply me talking about how annoying it is that it's buffering. But there we go. What I was trying to say here is that this zone is, of course, dangerous. We have a little touch of divergence on the stochastics and the sorry if it keeps getting fucked up. Oh, sorry for caps. Yeah, so okay, cool. I'll just try and ignore the disconnect, reconnect, and hope that it all fits together seamlessly for you afterwards. Yeah, on the bigger time frames, the DMI no longer looks to be divergent. But what we do see here is that the ADX has crossed over above it right now. That's cool. We could extend on up the way. I want to see this try and come up and touch the 40 zone if we're going to get beyond this zone here. So that's cool. Let me just look up to the 4 hour candles though and see really how we come in at, because obviously we're halfway in, or coming up towards being halfway into the next one. Got a wick here. How are we doing? So now we start to see a divergent picture. This is premature, it's not yet, but if in 2.5 hours we see this full back down the way, perhaps we're looking at a divergent picture. And then of course that would be negative, in which case I would say that IR Gunner's chat about this being negative would be correct, but currently of course is a statistically more bullish pattern. It's cool. Are we at breakout territory? Well, frankly, you know, as I said, I would manage my risk with this red box here. That's how I would manage my risk quite easily. I would be happy to short it, managing my risk again with that red box just there. I'd be happy to long it, take a long position here, from the red box. Would be dead easy, handy to long it. Could even just use that there as my stopping point. Would be tempted to do it a little bit sooner, on the basis that, you know, we quite often retest patterns after having broken out of them anyway. So like there's that temptation there. Really depends what we're looking at in terms of upside targets. Well, we're higher than that anyway, but we're looking up towards those zones. Far too much. No, I'd be happy to take it. I'd just be happy to wait until we see the 15,900s area, as opposed to looking at it right now. This is that zone. Of course, if you want to, then we're looking down towards the small time frames. And is there a scalp move on the go right now in here, looking at things nicely? Well, yeah. I mean, if we see this prices breaking down below this moving average here, then I'd be happy enough to take a sort of small $20 move, for instance, or whatever. That's enough to be getting by with. We see this is lower than the previous high in that area. There's only so much value that you can really do to extrapolate beyond the zone and the talking about the risk reward ratios and everything else I've already spoken about. So I suppose I don't really need to go on about things in great detail. Let's be aware of what's happening right now and come back and check in this in 5 minutes. I'll go and put on some Fritham music. I'll chat to you a wee bit, and I'll take a look at Ethereum and see if there's anything from across the markets kind of giving us a clue as to where we could be going with anything additional on the go here. Are we looking okay on this one, on this front? So divergent. We're so divergent on the this line here. Of course, we're potentially breaking outside of that wedge I was talking about before. I already spoke about this in detail. We're very much past at 436, so that means the 236 has now got confluence with the 56 period moving average and everything on, or 54 on the 4 hour. On the 24 hour, does that line up with something else then for us? Ish. Movements down past 435 would be quite negative if we'd close below it. I can foresee a pullback towards 435. We're currently coming in here and putting in lower highs on the daily. If we do go on above here with higher highs on the daily, take out that green serrated line that we drew on the charts the other day, things are positive. We're doing it without divergence, and we could move towards the top side, and top side targets come in there towards $500 is an easy enough area to look to. If that doesn't happen for us, then we're looking down the way. This is really at the point here of flux. Trading from here is more difficult than trading up to here, more risky in terms of right now. Easier to manage your risk though in terms of low risk entries and exits, in terms of profits, in terms of your risk to reward ratio. And I'm going to get for them up. Cool. And then I'll check it back towards the start. No, don't start playing and giving me copyright strikes. Don't you dare. Whew. Go back over here. And then we can listen to it in the background as I just kind of chill out with this lo-fi chill music. I think if I want to skip in a bit, this is kind of better for background at this point. From here, that's where we'll go for this chat. Let's bring that down a wee bit, and I think that sounds more endy for us. Bring back up this chat. Go over here. It says it's not connected. I can't see any chat from anybody. I wish it would reconnect for me. What if I hit refresh on that page? Would that do it? Okay, so we're reconnected to the chat. That's good. I can just say sorry for the stream interruptions. Let's just chat and chill out for 5 minutes more before I sign off. Cool. Thanks very much for your comments, Susan. It's really great to have female audience as well. We see you, says Zoner. I see you too. I like that, by the way, that we see you is a good way of saying hello to people. Mr. Fish. Hello, Mr. Fish. How are you? Maybe one day you'll be Mr. Whale, and that'll be great, won't it? But right now you're Mr. Same sort of story, looking pretty good. However, any close here which doesn't get up towards the top end of this is going to show us divergence. Then we just pull back into that zone thereafter. So look out for that. That's that's what we're doing right now proactively. And on the 4-hour time frame, you can see that the divergence between these points and the previous points is very much there. Until such times as we've really moved outside of my wee red box zone, this is going to end up being divergent. So this is obviously it's premature to say it, but there it is, and we know it. And in terms of other time frames, 12-hour, 24-hour, you can see it's just divergent across the board there. I mean, the 12-hour time frame very much shows you quite clearly what we're looking at here in this one. So, personally, I'm in no great deal of rush, and I don't feel like there's any big issue for me in terms of what's going on right now. But ultimately, this is probably a time when people are going crazy in the world. Let's go take a look at Tezos with my pal, Mr. Fish. By the way, you're welcome. In terms of Tezos, the level of BTC is a major resistance area. Exactly, Peter. It's a major resistance area. If we go past here, there's plenty of trading to be done. And if we pull back from here, plenty of trading to be done. What you'll find is that people who are less experienced about trading are looking at this zone right now going, oh my god, oh my god, oh my god. Everybody else, like Peter probably and myself, are not. Close my days now. Super. Look at that. Everybody watching this stream, read that comment. Super day. Can you please absorb this information into your schema? This guy's had a super day. He's closed his trades. Right? I'm not telling you to go short. I'm just telling you that you don't need to. That if you've been watching Crypto and think that that's the way to trade, it's not. Right? It's not. Peter's just done it. Okay? He's just done it. Wink, wink. There we go. Nice one, everybody. You benefit from that massively. Right. So, anyway, me and Mr. Fish, we're taking a look at the Tezos. Tezos itself doing well up here. What we're looking at right now is asking questions. This beforehand we had a symmetrical triangle on the charts. If you watched yesterday's video, it was positioned something like this or whatever, and right now we could be breaking out of it. I changed it over to be an ascending triangle because, of course, as you can see, there's oh, by the way, I quite like this one biome. This is also quite nice. I like that background, that music in the background. Yeah, so what we have here is this ascending triangle perhaps, and it lines up nicely with the if this zone here in terms of the fake out for the symmetrical triangle, which we've experienced so far, which lines up nicely with the 618 golden pocket in terms of a retrace from the highs that we had over there on the 13th of October down to the lows on the 4th of November. Retracements against that trend come in here with this 618. This 618 has confluence with this area, which is your last sort of in between lower high after your lower low before this lower low, and then the bullish divergence kicked in here. The bullish divergence which kicked in at the low end of this parallel channel. So this point here is so significant. If we move beyond here, it's very good, but I am telling people to be cautious in there at all the twos. As we can see here, that happened in the recent past. Again, all the twos. $2.22 would be oh, by the way, Mr. Fish, do you want me to look at Tezos versus Bitcoin or Tezos versus dollar coin? I'm on the dollar coin at the minute. Or are you one of the rare people who actually look at it versus Ethereum? Because I can look at all three. Check out Ethereum, down 4% in the Ethereum pair today. That's maybe perhaps pushing against its range. Another good opportunity for people who are conducting arbitrage on DEX, probably. Shout out to Kevin Mehrabi, by the way, as well. In fact, I'm just going to interrupt myself real quickly on this live stream to go to Twitter and go to notifications, and I'll go to home and write a tweet and saying where's my at button? At Kevin Mehrabi, doing a live stream just now, looking at Tezos with some of the community. Wanted to say hi as I am giving you a shout out. Keep up the good work. Just mentioned a Tez DEX, what do you call it? DeFi arbitrage opportunity potential. So you should check out your charts there with regards to that and see if it's useful. Kevin Mehrabi, by the way, is this guy over here. We follow each other and we talk in the behind the scenes. He's a good guy. I recommend people follow him. Anyway, there we go. Mr. Fish, please both no problem, and Eth also actually no problem. I also check out XTC ETH. It's good to know that that these bits of video get actually watched by some people at some points. I'm fascinated by this area right now. I love to see the fact that we're consolidating. I'm happier to see that it's an ascending triangle. I believe ETH will outperform Bitcoin, so looking to outperform ETH. Well, fair enough. Fair enough. We can actually do that. I'll wrap up the whole live stream by just following through that thought process. That's gonna be the context for the end of the live stream, Mr. Fish. So yeah, I'm happier to see that shut up, Rhythm. Just kidding. You're a bit too loud. I don't know how that's coming across like on your stream, but it's in my ear right now. It's a bit too loud. I have to put it down. Really do like this guy's album, and I'm really happy that he's a follower of the channel. Yeah, I'm happier to see that we're in an ascending triangle at the minute here, consolidating at an area of resistance. You know, this gives you the impetus to then move on past. If we take a measuring stick here and I just adjust it so it's not extended. Take the measuring stick here and pop it up. What it shows you is it takes you up here to be challenging the previous high over here, which is, you know, where we drew that Fibonacci in from, and it changes the overall dynamic of the chart. Now, this downward sloping resistance lines that we have here as a result of this pitchfork in the background, we know that this has been a good pitchfork in terms of telling us where we could be going for a long time now. This means it's easier and easier and easier to actually get past these key areas. Of course, it's less satisfying, and ultimately coming up here and finding resistance at the top end of the pitchfork, because it's a downward sloping one, means that you're coming in with a lower high than the previous one, and from a macro point of view that's not good, but that's okay for now. And of course as well, in terms of this Fibonacci that we have just here between these zones, that the 1618 comes in at around about the median line of that parallel channel. Movements towards the top side, should you go for a big sort of bull run at that point, see the prices going up by 30%, and that would be very, very good if that were to happen. Right now, of course, I'm waiting to see how we respond in amongst these areas. If we got a pullback, and if I just drop down to something like the 1 hour time frame to show you the context of this ascending triangle here in this zone, if we got a pullback here, it wouldn't be that unexpected or surprising. It's really going to be about this area here where we have the 618 overlapping with the top end of that parallel of that ascending triangle. Support we want to see coming in at about 213, and that's what we know as being the case already. And if I just take out another Fibonacci retracement and show you the for Y's on that one, for Y that's the case, coming in here at $2.10 is our 236 Fibonacci retracement. That's only towards that high. That's the wrong high to draw into. Sorry. You can see now that actually it lines up perfectly with that point there in that $2.12, making that point I was making for me make much better sense. Therefore, you'd want to see that happen, turn around from there. If not, you know, maybe we just go on in the meantime. Think things are looking good for this one, and I'm happy to see it. Of course, you know, we're just pushing past the neutral line here on the 1 hour with the stochastic. It's pointing towards the top side. Things looking okay. If we retrace from this area here, we've not got a higher high on the 1 hour, so that's not divergent. Everything's okay. There is a slight warning for us to be had, though. If we were to go back down past this 236 zone at 212, you'll want to know know this so that you can be forewarned, because forewarned is forearmed. That's what I always say. Forewarned is forearmed in terms of the where are you bugger, you head and shoulders. See, now what you could be looking at in terms of this thing is this general. Actually, I'll draw it in using the 2-3. We accept that the 236 was right overlapping with that 50% line, I believe, in terms of what I just kind of demonstrated. So if we had something like this on the go, and it is possible. God, I hate this tool so much. I always talk about it. Then you could be looking at head and shoulders, you know. In which case you'd be asking questions about a move which could take you on down towards these other zones, and then you're trying again at that $2 area, and that's fine because while on this looks like a smaller, like a lower low. If we jump up again towards the 4-hour time frame, we can see that there's potential for us to do that and it still put in a higher low overall. The worry about this is that the head and shoulders just here isn't really done much in terms of the overall picture, but we can alleviate that worry when I point out the fact that this body closed, despite the fact that the wicks were lower, the body closed higher than we are over here, so we are trending towards the top side, so that's good. BTC already broke up. How are you? I'm good, Eli. Is it gone up away even more? It's at the 900. No, this is where I would be doing this is where I'd be managing it from. Is this area here? But yeah, I'm reading this as Eli. I hope to goodness that you are still Eli. I'm pretty sure you are. Maybe in time I'll actually learn what that looks like. That's cool that we've done it. I'm not sure. By the way, broke is was this a break here with that wick? Was this wick here a break? You know, break isn't as easily defined as that. Let's go down to the 1 hour time frame and say, was this breaking it here in the last hour? Are we breaking it now? Now, of course, we are in the process of breaking it. Just like if I take this piece of chocolate here and I say, doing this is breaking it. It's breaking the chocolate, right? But it's only broken later. Breaking and broken are two different things. Let's be aware of that. Okay, we're breaking it right now, but it's not broken and it remains unbroken. Like Backstreet Boys. Or whatever that song is. I don't really know. In that area. Anyway, cool. I wanted to keep on with the Tezos. So we've done Tezos first. So let's look at Tezos versus Bitcoin. Now, Bitcoin, obviously, it's going up the way. Currently, then we see red candles obviously appearing on the Tezos pricing. So where are we in terms of this movement? Well, this is higher. This was higher than the previous one. It's not divergent. This low is coming in higher than the previous low. RSI lower than the previous low. That is a touch of hidden bullish divergence on the 4 hour time frame. Okay, at this point here for us, as we can see down below. So that's cool to have that on there for us. We came up close to the 236. We didn't actually manage to break above it yet. Our highs today, 1429. You know, I want to see us moving up above this zone. Everything's still looking pretty good for us. What about this wedge? It is a pathetic in terms of measured move structure for us. Just let me show you. Because the wedge is so narrow. Taking it in here from our breakout point only carries us up as high as the 382 or even, you know, less, and takes us up to the 236 if we only get the textbook measured move off there, which is a 60% of that distance, you know. So it's not, so I'm not, while this is a nice point to make and it's something that's worth pointing out to people and talking about, it's not something that I'm putting much weight on in terms of movements. In terms of the small term time frames, though, the 4 hour, we do see a cross between these two right now, the pink and the yellow. That's obviously not ideal, but if we could find support at any of these zones and move up the way, that would be good. In order to do so, we would need to be above the moving average itself, so that means that we need to see us moving up the way and coming in for a higher low. Let's you know, and this is obviously premature. This is I need to premature, just so that people don't see that has been done yet. I thought that was obvious when I was saying it, but I didn't explicitly say it, and now I have. So as you can see then, in terms of these movements, we're actually below the 236. So if we want to see this uncrossing and going positive again, we need to move back up above 1376. Is that possible for us to do so? Absolutely possible for us to do so. Carp DM, oh, you're up 4%, are you? Anyway, we'll check that out in a wee bit. Oh, that's on the day, isn't it? That's on the day. Sure, that's on the day. Sure, yeah. Nice to see you, Carp DM. Nice to see that you've decided to carp this DM with us all here. Could we see this happen? Yes, we could. Obviously, if we come in here and bounce at 382, we're getting in a higher low. Movements below the 382, having gone past the 236, do mean that we could come in here for the 618 golden pocket sort of retrace. Going up towards the 24-hour timeline, you can see that that would constitute a higher low. We haven't had a higher low as yet. This is a low and a lower low. This was a low and it's a lower high. If we want to see this turn around, we want to see happen if we're going to be very tolerant about this. And I suspect you probably are, Mr. Fish. You probably want to see this sort of thing happen in general anyway. You'd be happy enough if you're dollar cost averaging in your positions. Now that would be saying that what we're doing is putting in a higher high. So we'd have a high followed by a higher high, having had a higher low at any point along the way, including, you know, this, if it turns out to ultimately be so. I feel on the big term time frames, I wouldn't be surprised to see this going down to sort of the 1300 or 13,000 area again, to be perfectly honest with you. But then if we do go on up the way, we've got this structure, and suddenly what you have is a bearishly divergent low between these 2 points, or bullishly divergent low, which then led to this happening, which would then look like that, then look like that, then look like that, and then the picture from the broad scheme of things looks very, very, very different. As you can see, we've not had anything like that happen for a long time in terms of, you know, coming in and putting in. We've been trending down for a long time, you know, and even here when we were trending up the way, it was so sideways. It's a huge rectangle, and it formed a massive Wyckoff distribution top, and then we came back down the way. What we could see happen here is a trending move towards the top side for the first time in, let's face it, since here. Back at the start of the year. So, you know, it's taken us a whole year to get to the point where we could say that we've got a reset button hit on the trend. Let's jump over to what we see in here. 15,950, 17k baby coming in. Yeah, cool. Let's go check it out then, Carp DM, and I'll go back and do the Ethereum thing at the minute. So we spoke about this beforehand in terms, I mean, everybody that's been watching this whole stream knows what I told you to do in terms of the two positions that you could have taken. Go to the 12th, to go to the 4 hour time frame. Oh, we're not there yet, buddy. We're not there yet. Now, of course, if ultimately it ends up that neither of those two positions get taken, that's fine. Who cares? We don't have to do every single trade. But we're not. Carp DM, buddy. Look, matey. Love the enthusiasm. I love the star eyes emojis. It's brilliant. Until we actually get to that 16k, we're not at 16k. This is brilliant though. It's great. But we've not taken out that previous wick of that high over there on the 6th of November. We've not done it yet. Okay? We've not done it yet. You could easily have an easy to manage. If you were looking for this, just simply to come back down to where we are now, you could get an easy to manage trade here. You wouldn't even stop out until you got to $16,050. So, you know, if you were looking for this trade to be wrong, if you were sat in a room with somebody who's saying, I'm doing this trade right now, and you were like, you're wrong, hold on to your hat, we are leaving the base. Okay. Do I have a hat? Here's a hat. So yeah, we're not quite there just yet. So if you were looking to do it, and you had somebody in the same room as you doing this trade here, they've got a risk to reward ratio, whatever, of that. Let me just even bring this in a wee bit more because to make it more realistic. That trade is still absolutely on for everybody to be aware of. It's happening in the next 10 minutes. Trust me. I don't disbelieve you. Okay, I don't disbelieve you. It's just, and I do trust you. I trust you with all my heart, Carpy. I really do. Of all the fish out there, it's funny actually, Carpy, me calling you Carp DM, and Mr. Fish. I have to go back over to Mr. Fish, the genuine Carp, to finish this up. Look, we'll come back to this in a minute. Give me a shout in the text box if we actually do, you know, invalidate either of these trades or whatever, right? Because right now we're look, if you want to do technical analysis, which is going to benefit you in the long term, you're probably going to want to be able to relinquish the emotional stuff in and around these zones. This is clearly an area where there's going to be a lot of emotions. This stream, by the way, has lasted for 3 hours and 20 minutes. So, and I've been talking the entire time. like I said as well, I do like Mitch Ray, but he doesn't do technical analysis the entire time. What he does is he sits there and gets drunk and gets lots of money for it. I've been doing it the entire time. Bit tired. Got my hat for you though. I'll keep my hat on until such times as you tell me to take it off, okay? Now let me just take a look at Tezos versus Ethereum so I can wrap this thing up. Aye. Look at that, it's broadening out the way. This is the 4-hour time frame. We're getting gaps and stuff on here. This is a very low liquidity pairing. Appreciate your channel, buddy. Man, Carpe Diem, I appreciate you so much, my good pal Carpe. Don't worry about it. Thanks so much for the support. Really do appreciate the good comments. Look what we've got here in the go, right? If we want to be honest about things with regards to this price structure, you could say that what we have is a broadening wedge structure. And broadening wedges are so often continuation patterns. The reason why they're so often continuation patterns is because you see exhaustion coming in at either point, in which case entropy tends to kick back in again, and it just goes the way of the prior trend. So with exhaustion comes entropy, which comes a return to the previous thing to say, what were we doing before? So this doesn't look good in terms of that structure outside of the move, outside of this zone. But let's also be honest about the way that this is lining up and saying that we had this huge structure of a downward triangle here that we're only just starting to get to the point at which we're moving outside of. Now, if we need to do that sideways, cool. If we need to have a broadening structure on the way, cool. If we're going to experience a degree of exhaustion along the way, that's all good as well. In which case, let's just remind ourselves about the last 6 months of price action here and what we're looking at with regards to Ethereum. So if we do see things moving back down the way, I'm looking. I would stop out perhaps potentially of trades where this wick is giving you, if you were to be looking at a long position on this one, which I doubt you are, but say you were, and then you said that this was your and you just wanted to structure it in terms of what should I look for in terms of a move where tolerance from where we are in this very second right now is hit. Oh, I'm gonna have to go back. We're going to have to go. That's cool. I'll go back in a second. You'd be looking for a move up towards the 236, right? Not the two. Where? No, this channel here up towards 0053. Let's dive over to Bitcoin again, people. Right. So, imaginary trade time. Okay. Imaginary trade time. We have it. It's on. What we want now is to see that trade was wrong. Okay. Let's do this. Let's do this, people. Let's do this. Now everybody's dead excited. I'm going to be devil's advocate here, right? As you can see, our trade got taken, right? This isn't something that I'm just pissing about with. As you can see, it got taken, right? Now I'll be the devil's advocate, and I'll be the guy that's shorting it in the room when everybody else is longing it. Okay? I'll be that guy. You guys go ahead, do what you want to do. Let's just chill out here for. How long have I got long on Frithm's music before it runs out? I've got 3 minutes. I'll have to go back a bit. It's only a half-hour long album. I mean, how long can you realistically stand in... Oh, a ghost! Oh my god! How long can you realistically stand in the woods doing music for anyway? Right, cool. So where we are right now is I have an imaginary trade on. I entered into it here whenever Eli... My buddy Eli, that says Eli by the way to everybody who's just tuning in and doesn't know what that Hebrew writing says. It says Eli. And I've got this trade on. Now we talked about this general idea earlier on. Before it got here, I moved it down slightly and talked about how I'd be happy to do it from within this zone, yada yada. Right now my trade is it's an imaginary trade. Obviously, I'm doing a live stream. If I was in the real world, so to speak, then you can rest assured that I probably would have taken this trade right there and then, actually, to be honest with you. Now, that is on the basis that we also talked about the long trade that we would have taken, right? We talked about the long trade we would have taken. Let me just get this out here. We talked about the long trade. It was coming in like this sort of a thing. Whee! Way off. We didn't get to the long trade entry point. So hard to position these things. Didn't get to the long trade entry point. What we did get was here, right? But we talked about how this would be an easy retest thereafter. So my imaginary trade is now in 0.83% profit. That's cool, right? It's not there permanently, but I can now put a stop in on my imaginary trade in profit, and I'll definitely cover the fees of my trade. Okay? Definitely cover the fees of my trade. If I'd have done 100x there on that, which I never, ever, 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 never do, ever. But if I had, then yeah, I got in. I'm in profit. Zero risk trade for me. Zero risk on the table for me right now. And I'm still in a position. Whereby I can capitalize from a long trade off this if we actually get to the point where it's hit. Okay, so was it worth having this red box in here and talking about it? Yes, it was. How am I positioned right now then? This is imaginary, but if I wasn't doing this live stream, this would be my exact position that I'm in right now. I never talk about this sort of thing on the channel. I don't think it's a good idea to do this. Obviously, as well, people don't have the stomach for it, to be perfectly honest with most people. But here we are, and we're doing it now. I would be in a position where I either have a winning trade towards the downside, or I stop out and I open up a winning trade towards the long side, potentially. Or, you know, of course, this one just fails, right? If that happens. Where is the zone in terms of how much in terms of risk have I got in terms of a loss? Oh, so get in. Oh, Eli, no. Personally, I would wait until the prices hit 15,981 and manage it and stop out if we come back down again subsequently, having now retested this ascending triangle. I would stop out if we push down past that. So if we go back into the 15,800, if we go back into 15,700 territory, I would stop out. Okay, if we go in, and I would go long from 15,980, something like that. We're not there right now. Currently, we're in this this period. This area here that we're in is the emotional area. Do not be fooled. Do not let yourself fool yourself. This zone here is the highest risk area for trading this whole thing. It has been this whole time. This is why we talk about this on the channel all the time in terms of fake out zones and whatever else. This here is the area that the likes of the Moon and the cryptos, where they, you know, what they talk about trading when it's not the reality of trading. Okay, the reality of trading is above this line here or below this line here, right? And right now I've got a position which hasn't stopped out in terms, it's an imaginary position, it's imaginary, but it hasn't stopped out. I'm stopping out here on that, on whatever. I don't care. It's an imaginary position anyway. What do you want to say? Let's give myself an imaginary stop position because I want to be in profit. So let's just say that's my fees covered. I've not lost anything at all if this happens. But obviously this is not real trading. This is me talking about things hypothetically because I'm doing a live stream and have been for the last 3 hours and 30 minutes. So yeah, let's just chill out for a wee while. CapDM, it's knocking on 16k's door. Knocking on 16k. Yeah, that's what it's doing, mate. It is. Are we able to achieve anything right now? Let's take a look then at the oscillators while we're up here as it happens. Well, we got bearish divergence here in the 15-minute time frame up there. Bearish divergence on the stochastics and not on the DMI. But if we don't, well, I mean, it depends on how far back you look. Clearly we do on all of them when you look far enough back. But but if we push past that 16k door, what does it mean? Well, it means that this anchor point no longer points down, because look, right there is an anchor point, okay, and then the RSI is going down the way because of the red candle that we're in right now. But if we go up the way, then that won't be the case anymore, and it won't be divergent. So when you bring up the charts again and you say, why is that the price to get in at? Because it's at that price there that we don't look like we're about to be topping out right now in this zone and visiting back down to the sub 15,800 area. Right now, this is how you do it. This is the pro stuff right now, okay? So, excellent. Missed 3 hours of it, but good stuff. Oh, cheers, Phil. Nice to have you here. By the way, everybody check out Phil. He is a member of the channel, which means that he has watched the channel enough times to know that he feels like he wants to. Oh, I shouldn't have done that. That he wants to support the channel by sending some value back the way. Cool. That's really appreciated. People who right now, for instance, I would have made more money than I've made from streaming on YouTube this entire year with every single video that I've ever done. Take all the money that I've earned from every single video from the entire year of streaming. I'd have made more money already in this one trade that we talked about for 3 hours in advance than what I've made. Okay? Just so you know, put things into context. So when somebody like Phil decides to become a member of the channel and send some money to me directly, it's hugely appreciated because it outstrips the amount of money that I get from YouTube by a vast amount, and it makes me way more happy to be doing this sort of thing, doing a bit of analysis for people, which of course is let's be honest, it's only of detriment to my finances. My finances doing this job is detrimental, as is so clearly demonstrated from this live stream. It's not that I've got anything to prove to anybody, but here we are living it right now, seeing this. So Phil, thank you so much. Make this a paid thingy once a week, but that is a bias. Yeah, maybe I will, Phil. Maybe I will, because I mean, look at this. The proof's in the pudding, is it not? I think the proof is in the pudding. Now, of course, this is just us chatting here, and whatever else. What I could do is instead do the live stream, but just have it so it's members only that are able to talk in here. Maybe do that. Anyway, I believe in the quality of the content. I know that I'll get Carl the Moon levels of financial security from putting out content on YouTube in the relatively near future. I know that the subscriber count will go up so much that when I sit down to do a video during the day, I think to myself, that's nice. I'm going to be able to buy a bottle of wine and some food and pay an electricity bill with this video and go back to doing what I was doing anyway and get that benefit. I know that, okay? Don't need to worry about me. I know all that. That's all going to happen in my future. But, this is risk. This is all risk. Everything that you do here is risk. And look at it go, right? And I've demonstrated beyond the need to demonstrate it anymore. In fact, if anything, I'm more inclined to remove all my videos from YouTube that are historical, that show you that obviously I know what I'm talking about. I'm more inclined to do that than I've already proven it. I've got nothing to prove, and I feel so much like I've got nothing to prove that I just don't. I don't even think I feel so strongly I got nothing to prove that I'm almost tempted to take away all of the proof, which is there. So I'm tempted to. But anyway, yeah. At some point in the future, this will actually provide me with an income, which has got no risk involved in it. Okay, and wouldn't that be good? I think I deserve it, and that I think that as well. I look at videos like Kelly Stamps on YouTube. If you've ever watched Kelly Stamps, and yeah, by the way, if anybody's interested in why I'm not doing TA right now, it's because it's already done. Like Peter says, top of the channel, why would you buy, risk reward, FOMO, all these things. Everybody, crypto crackhead, 100% right. We've already got this. We've got this, everybody. But yeah, I watch videos by people like Kelly Stamps, and what she does is she talks for a wee while, she just expresses herself, and she walks around, she eats like tiramisu and talks about a house plant or whatever, right? And she's got so many subscribers, and I'm fully aware of the fact that I have enough depth to my character to be able to do the exact same thing, and that if I just did a lifestyle vlog, that I could probably earn multiple figures every year. I could probably get a 6-figure income from doing a lifestyle vlog on YouTube, because I frankly have the personality to do that. I'm 100% confident, and it's not arrogance. This is now 11 months and 11 days. Happy Singles Day to everybody, by the way, if you're out there in the world. If you're single, happy Singles Day. I'm currently in the mode of chatting up a Chinese lady. She was here, by the way. This I think this might have been her earlier on. This disappeared anyway. When I said hi to a Chinese person, it might have been her. Singles days in China. Anyway, yeah, what was I talking about? Oh yeah, I could do that. This is not arrogance or whatever. This is experience from having done this for 11 months and 11 days now on YouTube. I know that I could do this, and I know that if I just talked about tiramisu and what it's like to be Scottish and everything else, that I could get multiple figure income every year, and that involves zero risk, you know. And I like having long hair. I don't want the stress of risk to make that all fall out of my head. So I know that I could. So that's when. So when people like Phil come along and help support the channel, even though it's only just a tiny amount of money, and it's like, what is it, Phil? It's less than a large coffee from Starbucks every month, less. It gives me something else, you know, in terms of value and the connection between people, and that it makes me know that I'm doing the right thing, and that divide between where I am now in terms of a YouTuber that makes less than 50 cents for every video I put out, less than, to the future where I make a decent amount of money doing this content is worth sticking to. And given that I've already proved myself, for instance, you know, right now live, doing this live in the run up to this, you can go back and watch this live stream so you know that I'm not bullshitting. I don't need to think about, you know, I know I'm capable of making my money from trading anyway, but I would love it to do this, to have this as a income that was sustainable for me, so that I never had any fear of risk in my life ever again, because I'm a full-time trader. So if anything goes wrong in the markets, and there are days whenever you can lose your entire account based on things, whatever. For instance, I've been rushed to hospital in the past, which has cost me multiple thousands of pounds. We're talking like, I don't even want to say the number because it makes me sick. We're talking a lot of money because I was rushed to hospital because I couldn't trade thereafter and stuff like that. So I don't want that to happen to me again. So this is what I'm doing here with the YouTube. But anyway, yeah, so this is still on. How about instead then of this, we take 5 minutes to just look at my YouTube analytics? Does anybody want to see it? Does anybody care? This isn't going to change for 5 minutes, but I'm sure you're all watching the charts anyway. Somebody stick a comment in there to say if I get stopped out. I'd get stopped out if the prices go above 18,955 on my imaginary trade. Okay. Let's go check out my video. Go back. Yeah, no, I don't want to get rushed to hospital again either. Thanks very much for that, Jimmy. I do. Yeah, I agree. I take good care of my health and stuff like that, but these things sometimes are unavoidable. I can't tell you what I made off of yesterday's Tezos video, but I'll tell you what I made in terms of money from the day before. Wrong button. Sorry. Here's the views, by the way. This is what it looks like if you're a full-time YouTuber and you've got your... Which is what I am, because let's face it, I'm a full-time trader and that's where income comes from and whatever else. But I'm a full-time YouTuber. I do more YouTube work than... Cheers, Nav. I really do appreciate it. And you know that that I personally think you're a great guy anyway, so thanks, mate. Yeah, this is what it's like if you're a full-time YouTuber. I'm a full-time YouTuber. I've been doing YouTube every day for the first 6 months of this year, then every weekday since, to help people. I've got people like Nav and Ethan here who can vouch for me, and I've also got Peter and also 1,913 other people. I shouldn't have hit that button just to make that point. My internet's going too slow. People here who are also would vouch for me in terms of how I put out quality content on a daily basis. And let's just review things. Do I do it for money, or do I do it for some other reason? And of course, ultimately, I'll be perfectly honest with you. I want to be considered to be, because I believe it myself anyway, one of the best traders on YouTube and one of the best technical analysts. I think I've already proven that I am, but you know, time will tell if the public agrees, and I'm not the judge of that. You are. Tezos and Link video, 138 views, so obviously, you know, a lot of views. Last 20 comments, 35 likes, 100% of people that watched it liked it. Let's check it out. Analytics coming up here. Drum roll. I'm going to hit the revenue. Oh, there it is. 93 cents. 93 cents I made from that video. 93 cents. Now look, playback-based CPM, right? Playback-based CPM. $26.30, right? $26.30. Okay, playback-based CPM, $26.30. Here's what that means. Playback-based CPM means effective playback-based cost per milli, as in per thousand, and tells you how much advertisers paid per thousand monetized playbacks. So, and you can assume that it's going to be fairly similar for Carl the Moon, right? You can assume it is $26.30. RPM means how much I actually made. Because, you know, you can use Brave Browser. I use Brave Browser. I recommend it. But that means you don't see ads. So these are all the monetized ones. So I got $8.80 for every monetized playback. Let me just go back and get another number so that this sort of comparison is fair. Let me take, well, there's 69 views on that one. So we'll go with that because it's a good number for a laugh, right? And we'll see how much money I got on this one. Revenue here. 241, okay, 17 cents. They paid $7.11 for it. That's pretty crap. Let's see what I got for this Bitcoin video here. What are people saying? I don't know. I got revenue, I got 374, 930, 47 cents. You know, nothing again. A random Bitcoin one from the past, maybe over here, just to see if the numbers are different. Analytics. Revenue $45.52 for every 1,000 views. That's how much this one got. $45.52 for every 1,000 views. How much did I make? I actually made $3.51 on that video. That's a real shock to me, right? Hard one. That's a hard one. That's a hard one. It's a hard one. It's a hard. See, because this is an imaginary trade, I get to experience the full. If I was trading with real money and that here doing this now, I wouldn't, you know, beat myself up about it. But this is imaginary, so I had an imaginary stop point here for us. I still am, you know, if I'd been doing it with real money, either I would have stopped out in profit there, but I'd still be tempted. I still would be tempted because it just got up there. You know, you're right between these two. You know, you're right between these two. In terms of, you know, I was flipping from one to the other. You know, I'm clearly putting this right on the penny on the line. I don't, you know, and that's without giving it any time or anything in between. You know, so technically I'm in imaginary trade number 2. I did say that I would do that at that point. In reality, would I have necessarily have done that, or would I have re-upped on this one? In the meantime, I'm not 100% sure what I would have done in that scenario, because you only know it when it's real and you're doing it real. Everything else is hypothetical. This is undoubtedly the best YouTube channel. Oh, cheers, Peter. Thanks so much. Some profit, definitely win. Cheers, Susan. Exactly, definitely another win. You know, I'm in two minds, right? I mean, technically I would be going long from there, but I wouldn't be going long from there. You know, because this is the reality of it as well. You're looking at the 15-minute time frame here, and you're seeing that we've got that we've got bearish divergence here on the 15-minute time frame at an area where it's a huge resistance point for us, where we're within the red zone still, never having moved outside of it. We didn't close outside of it. We haven't done anything. All we did was wick into it for the splittest of seconds. So in all honesty, in reality, I'd have just taken another short again at this point here, and then I'd also put it back into stop profit. So if you don't mind, Mickey, can I just put in another imaginary trade for and put in another one and then have another stop and profit? Can I do that? Oh, cheers, Peter. Catch you later. Thanks so much. Yeah, thanks so much for that, Peter. Have a good day. Really do appreciate the support that you put in with the channel all the time. You're a really good guy. By the way, you'll notice he doesn't have the thingy beside his name. I don't give two shits. He's a really good, one of my good friends now, by the way. In fact, my only South African friend. Really awesome. Cheers. Thanks, Mickey. I'm going to go with that. I'll just stick another one in. Another one. It's somewhere in what do we want to call? I feel a bit peeved that it happened. Let's just say that I stop out at the wick of that previous candle. Okay. If we take out the wick of that previous candle. Yeah. By the way, yeah, the nicest South African I know. There he is, right there. Great guy. Really do appreciate it. I really do appreciate him. He's a really good guy. So let me just put my stop for this imaginary trade in here, okay? Let's just do that. I would take, and we'll come back and visit this in a second. I want to show people what it is. So if this video here got $45 per 1,000 views of people who actually watched the video. How many views Let's just see how many views the moon got for it. And you guys can decide in the chat what you think is a realistic level in terms of how many dollars per 1,000 views he gets for his videos. Okay, let's just look it up. Let's just look it up. This is a guy who I have got a great deal of respect for because of his abilities as a YouTuber. Right? Let me be very, very clear. Because of his abilities as a YouTuber, I've got a great deal of respect for him. He got 28,000 views on a video from today, 31,000 from yesterday. Let's just check out his channel. He has a video every day, right? 27, 31, 24, 27, 22, 41, 34, 30. What's an average number here for an amount of views that he gets on his videos? Just go videos here and see. 27, 31, 32, 27, 35, 23, 34, 17, 26, 29, 29. Let's call it 20. Let's be lowball it. We'll go at 25. So 25 times, and then what number did you decide on in your own heads in terms of revenue per 1,000 views? Let's say he gets $10. Let's say he gets $10. I don't think we really need to use the calculator for this one. That means he got $250, $250, $250, $250, $250. This is, and oh wait, these aren't even, some of these are multiple videos in the same day. $250, $250, $250, $250. Let's go back 10 days, because that'll make the maths easy. Let's go back 10 days and see how much money Carl the Moon has made on YouTube. Roughly speaking, bearing in mind that sometimes it may be way more than this, it could be, could very easily be, and I expect it probably is, way more than this. Let's just do it. 10 days ago. When did we find a video from 10 days ago? A week ago, 2 weeks ago. That's 2 weeks ago, this is a week ago. When was this video? Does it tell me the date? 2nd November, today's the, so that's too old. So it must be here, it'd be about 10 days ago. 10 days ago? Yeah, 10 days ago. It's less than 10 days ago. No, so he's there. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Sorry, how many is it? Where did I go from? Yeah, here. So I just go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So he has made, if we just take this, oh, wait a minute. Stop. Yes, nice one. Cheers for the music for them. Really do appreciate it. I'm stopping that. I don't want to get a copyright strike because quite likely something will come in, some other video will come in later on and it'll annoy me with the copyright strike. Still doing okay in terms of our imaginary trade. In terms of the Carl the Moon, right? So we're talking here in terms of maths. If you make $10 per 1,000 views and he gets 25,000 views on average, quite often it's much more than that. And in the last 10 days, he's put out 16, what was it? What? Loads. He pushes them. Come on, reconnect. Come on. He pushes his affiliate links loads. He pushes his affiliate links all the time. In every single video, he tells you to go and sign up for a leveraged trading account somewhere. And that means he gets a bonus for you signing up. And he gets a percentage of every trade that you make in terms of the fees that are charged for it. So in terms of YouTube revenue alone, Carl the Moon has made $4,500 in the last 10 days. Now, do I believe that this is something... I respect Nickelback's ability to sell music, and indeed, I do too. I do too. In fact, I also believe that Miley Cyrus's dad, I'm going to take my horse to the motel room, going to make love to a horse, presumably. I don't know what his song's about, but he ripped that off. Emery, bro, buy now, Ethernaut. Let's do it. Bro, buy now. Anyway, simple point. 10 days, he's made $4.5 grand from advertising revenue alone. He makes a lot of money. Let's just say he makes a few $100s a week from all of his different affiliate stuff. He makes a lot of money. Do I think that in the future that this channel can get to those points? Yes, I do. Will I then dramatically readjust the way that I have in terms of my own risk in my life? In terms of what, how I am able to stay alive from one day to the next? Yes, dramatically, and it'll make my life a lot happier, and I'm really glad that you're all taking part in this and supporting me in terms of this mission that I have here. Really am glad about it. Still not stopped out of that imaginary trade, Mikey. or Mickey. So yeah, so that's my goal here. I'm totally honest and open about that. I just want everybody to know that that we are, well, I mean, on the Bitcoin pair in Mickey, I mean, that's what we're talking about. That's why I didn't want to take that imaginary long, and you let me hold his hand. You're talking about Emery. Okay, Phil, time to do some hand holding. That's why I wanted to go back in for this again, if you can understand my philosophy. So in terms of this just now, yeah, we'll come back to this though. Although we're at this for how long now? 4 hours, so 4 hours, I mean, right. Yeah, man, no problem. One love to you too, Emery. Super, super glad that you're here. Don't have a thick skin. If you ever hear, or whatever, the English phrase for thick skin means that you don't mind, water off a duck's back. If anybody, the hand holding thing. Respect from the Netherlands. Oh, you're from the Netherlands. How gezellig, how exciting to have a Dutch viewer. Cheers, Emery. I know that you'll have a pretty solid personality as well, so there's no need to worry. You don't need to tell you anything. Good. Cheers, by the way, and welkomen. So yeah, look, we're up. What were we asking about actually? Sorry, buy now, bro, or not? Right. Okay, with Ethereum. Right. Sound. Do we buy now or not? We came in with a higher high. It's Class B bearish divergence there on this high. We are right at this 10 period moving or the 8 period moving average there, exponential moving average. We crossed over here. This is just a 15-minute chart. This is okay, but I don't like it. We went up past the 40 point, moved down. The 40 point came in at our high. No, if anything, on the face of it, just like with the Bitcoin scenario right now, the lowest risk reward trade, and it's too late for this particular, that point there. This was obviously during the video. This video's lasted for so goddamn long, but let's just say that you had a risk reward. Actually, undo that. You've got 2 different trade opportunities for you right now. Until such times as we're able to push past these zones, and I'll look at the different time frames in a second. Greets from Netherlands and Turkey. Netherlands and Turkey. Really? Cool. Nice one. Emery. Good name. What did I want to do here? A long short position effort. Generally speaking, this is going to be your lower sort of risk to reward effort is going to be in and around about this sort of a thing just here. If we just wanted to go back down and retest this area that we've been at several times in the past, and then if you were to sort of wanted to balance that out and make it decent, it's a bit crap here. So probably want to. Oh, that's ridiculous. That there. I don't know if you can see that properly. That sort of a thing there is your best trade on the chart right now for Ethereum. But of course, we could be looking up the way, in which case, at the point at which we come up past this, and bearing in mind that you would then need to reassess things at the time, then your next trade becomes looking up towards $500 perhaps, right? So if I've taken this top here up towards, let's call it 496, and we want to then have a sort of decent enough risk to reward ratio with this one, where does that come in at around about five here? That would then obviously be us breaking down, if we did break down below that 8 simple period moving average at that point, and line that up with a Fibonacci retracement from the lows that we had, bearing in mind that those lows are actually here at that 236 really as well. So what one am I wanting to use? It's a bit far away in terms of the 15-minute chart and whatnot, but realistically this is where we have to look to. So from here up to our high here, and coming in then and saying how does that line up with this? That's not great. Okay, so that was where we were looking from, and it's back there. Let's just take it from that previous low and see how that lines up with regards to the context. I'm just looking for context right now, by the way, mate. Just looking for context. Yeah, okay, so that lines up perfectly with where the 236 would be if we did go in for a short position one. Yeah, okay, sound. So failure on the long trade from that point up the way, I would then flip short again, take that trade on again at that point, which is there. going down towards this point here of 464. That would be the best trade that's on the table for us right now. Second best trade, of course, is the long towards the 500 area, towards 496. In terms of risk to reward, you're looking at the same two between these two areas. You would realistically have to kind of have your stop down there below the 8-period simple moving average and below these wicks, of the previous. You'd be looking in here, it's kind of complicated picture. You'd be looking in here and saying, we're coming back down, going below the closes of our previous closes here. This is a 15-minute time frame, so this is obviously shit. Let's just fit straight up. I mean, in terms of you want an answer right here, right now, if you look at it in a 4-hour time frame, then what am I going to say? I mean, like this is crap. This is shit. This is just for everyone to be clear on this one. You've got higher highs coming in here at the same time as you've got lower highs on these things. Until such times as we've really gone past the 500 buck point, it's looking pretty crap. So is the low risk trade at the minute to actually short it towards the downside, counter trend against the trend? Yeah, it is, because the trending moves were coming in from here during this symmetrical triangle. If you were wanting to be, this obvious symmetrical triangle here, and the breakout from it around about this zone, and then moving towards the top side, meaning that if you were in a trade towards the long side, then you're already in 3-4% profit, and you might be looking up towards maybe 10% profit, or 7 or 8 or 9 or 10% profit. From here, it sucks, right? This was the trade area back then, or indeed when we took out our previous highs, or indeed, like back at the start of this live stream would have been an all right time to take a trade up to where we are now, ish. Although I didn't really feel like it at the time myself. Whatever. So from right now, not great. Okay, I think that sums that up. Let's just check in with my trade here. Have I stopped out yet again on this one? On this, doesn't look like it. Doesn't look like it. We've got a bit more follow through so far at the minute with this 15-minute candle. It's looking okay. How are we doing in terms of the oscillators? Really kind of shitty. Look at the last 3 highs that we've got. So so just bearing this in mind right now, this doesn't look very good. There's nothing good about this. It doesn't look good. So that's the reality when you get to these inflection points in the market. And why are the inflection points in the market anyway? Why would a pivot point have all this associated with it? Well, because I think that speaks for itself. It's kind of the answers in the question. Beyond these zones, the picture rapidly changes back to one that's more normalized. Right here in this area that we're at right now, which is the red box zone that I identified 4 hours ago, is where you start to get this sort of crap on the go. So right now it looks like crap, okay? And until such times as it stops looking like crap, I'm not going to be saying that it looks good. The trend is our friend. It's towards the top side. If you want to trade off the back of that alone, then yeah, go long, because that's the only move from the macro point of view. But if you're looking to trade this within the inflection points and the zones that we have right now with decent trades and a decent time frame, with a decent risk to reward ratio, then it's not to go from here up. It was to go from before. And we did talk about it as well, that there was different options. You could have taken it from the movements past this in terms of when we came back down and retested that. So when we came back down, I did speak about this before. If you want to go back and look at it, wouldn't recommend anybody to do that. It was ages ago and there's no point. But what you could have talked about if you wanted a 5-to-1 ish thing is to say, look, if we come back down to these areas where we inflected at before, now having come up higher, then I'm happy to stop out of my trade. Otherwise, I'm trading towards the top side, and you'd have done that with the retest of the ascending triangle, right? But I was doing a live stream at the time, and I wasn't talking about it. But I'd have taken one of those trades, and then right now, instead of be looking at this joking with Mickey over there. True, seems fishy. Cheers, Mickey. Instead of joking with Mickey about where I would put my stop and whatever, the likelihood is I probably would have taken a long and had a stop in over here in profit. It doesn't really matter though, does it? Because what you're talking about here is risk to reward. You're not talking about where the market's going and what it's doing and everything else, really. Because where it's going right now is bearishly divergent unless we push past it. And what it's doing is confused and fishy, like Mickey called it there. So, until such times as stopped, didn't push past it. It's hard to tell because that line's thick. Mickey, it's hard to tell with this one. Can I just make this ultra thin and see? Ah, shit. Yeah, shit. Yeah, cool. Anyway, I stopped out twice in profit there. I'm still of the opinion. Look, fuck it. Let's just do it again. I'm still of the until such times as we've gone past here. I'll take a. What are we looking at right now? Go at 5 minutes charts and see. Yeah, cool. So what have we got here? This sort of head and shoulders type thing. Perfect. I'm shorting it from here again. Putting a stop. I'm not going to stop out of this one. I'll short it from here, imaginary style. So I'm sticking this here. This time I'm going to just remove that. I'm going to talk about the risk to reward here in this trade. I'll stop out of it if we go up to this zone. Otherwise, I'm not going to bother talking about it from an imaginary point of view. Hope you enjoy this type of chat. Oh, we just did it. We just hit the line again. Perfect, right? So this line stopping out if we go up towards that zone. Otherwise, not going to bother. And instead, we're looking at a risk to reward ratio on a trade. Maybe it's not fair to do that, and I need to do it more live style. So I'll just move it down a pixel or two. And let me see. I'll have to go up to the bigger time frame to see this. Where's my risk to reward ratio numbers? Okay, so I've got a risk to reward ratio on this trade, if I were to be so greedy, of 13 to 1. So that's ridiculous. Let us instead take it down and aim at the 236 there. We'll go a bit shy of the 236 in fact, because that's still 10 to 1 risk to reward. Yeah, I'm happy with that at the minute. Very education. By the way, much thanks. No matter which way it goes. Exactly, Mickey. Exactly. No matter which way it goes. Beyond this point, things can change, and we can talk about them differently. And we're prepared in terms of the stupid boxes that I've drawn on there. But until such times as they've actually done that, let's be honest, they haven't done that. So this is the third attempt at it. This time, instead of using a stop in profit, I'm going to just do it traditional style, where you have to eat a loss. And my loss at the minute in terms of risk to reward ratio on this trade is like less than, is 0.2%. It's equivalent of fees on an exchange in terms of the loss. So really, it's like a meh. $30 as well. It's really tight, really tight. So let me just go down to the 15-minute candle again for this one. And here we are at my entry price again as well in terms of this trade, with the way it just came back up there. So anybody watching along could do it too. I'm not a financial advisor. I wouldn't recommend you follow anybody on YouTube that does trades, anyone at all. So if I'm going to include myself in that, given that I only trust, and trust is a bit of a strong word, a couple other people on YouTube, and that's how I talk about it, I would say that you shouldn't do it with anybody, and I would include myself in that. So don't. Okay, don't. But look at it. If you did do it right now and you were talking about it, you could stick your stop in profit. If you wanted to, it's there. It's happening. And yeah, well, I mean, that's it, right? That's the story covered, right? We've talked about everything. If anybody has any chat for me, stick it in the chat box, because I'm no longer interested in looking at that screen there, where I have it. Instead of looking at my second screen here, where I have my streaming and my chat box open. I'll give it like 5 minutes from now. Pardon me, 7:34. I've been streaming for 4 hours and 6 minutes. Live, doing Bitcoin technical analysis. I'm a good person, Eli. That's really lovely of you to say that. Thank you so much. I appreciate that a lot. Wild leaves. How cool is that? Eli, thank you. And yeah, there's a Jewish song that I like. Elohim is what you call God, right, or whatever. I'm not a religious person, and I'm not Jewish or anything either, by the way. Just there's a song. I think maybe it's just the way that maybe it's just reading your scripture. I'm not really sure, but there's a Eloi, Elohim. Great stuff. I can't remember it right now off the top of my head. Anyway, thank you for saying that. That's really nice. How do you go for 4 hours without a cup of tea? I don't know, Susan. I couldn't tell you. I've got this juice here. It's just about enough. Honestly, I should have left ages ago. It's just that this is happening now, and there's no point in not following through on this, having spoken about it. But yeah, okay. But I have got to the point now where I've said we're going to leave it in 5 minutes. So it's 35 past on my watch at the minute. So I'll be leaving here at 22 on my watch at the minute. I don't know what that works out wise in terms of the delay on the stream. But anybody who's got any sort of final comments or any of that sort of stuff, stick it in the box there and I'll respond to you. Otherwise, and if you want to look at any other coins or anything, you better do it right now. Otherwise, I'm way off. Pardon me. I hope, by the way, when you were looking at that you noticed that I had reasonings in here as we were coming past this line as to, when you would flip one way or the other, that it wasn't a matter of just hitting the button and doing it right away, and as well that there was pullbacks and stuff like that bound to happen. And that, thank you for tuning in, and thank you to everybody who I maybe haven't mentioned. WallQ, thank you so much as well to you for tuning in, really do appreciate it. Thank you to everybody. I'm going to potentially upload a little video here where it just lasts for 2 minutes, where I run through a list saying thank you to everybody for joining me for the stream today. I really do appreciate it, and I am signing off for now. Thank you so much. I'll see you next time. As you can see, doing well. See you next time. My name's Rocky Outcrop. Oh, by the way, if you've watched this, subscribe. I'd really appreciate it if you subscribed. If you hit the like button, that'd be great. And if you as well share it with your friends, that'd be great. I'll catch you next time.